Good morning, everybody. Happy Friday. Welcome to NinjaTrader Live. My name is Jim Cagnina. I am the senior market strategist, joined by Tracy Shuchart, aka Shy Girl, senior economist for NinjaTrader. Tracy, good morning.
Good morning, Jim. We have kind of had a slow session overnight. We got a couple low-tier data releases with limited news flow, but kind of a welcome relief after yesterday and and the session before that. So, welcome to the day, guys.
Yeah, I mean, it's interesting though. Today's Friday, and it's the last day of the month. So there should be some activity going on across the board. I mean, right now the equities are kind of unchanged, but overnight they moved crazily with a 124 handle range in the S&P. And then we just kind of settled all the way back down to where we started from this morning on kind of low volume today. So there was a move afoot last night. I'm not sure what that was all about.
Yeah, I mean, as far as, again, not much news flow on the overnight. We got some kind of low-tier data uh, in Europe. We got some inflation readings from Spain, Italy, and Germany. They showed some progress on inflation, but nothing notable. Obviously, PCE is going to be a big number today in the U.S. Obviously, it is. I have to say, it is the Fed's preferred inflation measure. So we will have that up at 8:30. Now it is supposed to show a little bit of improvement at 2.2%. We will see. I mean, we'll see what this brings in. I doubt it'll be market moving if it comes in as expected. We had, Fed watcher Nick Timiraos. I don't know if you know him on X, but he shared estimates from kind of the professional forecasters, and they all show an improvement in April. So we shall find out if we don't, if we do see some inflation creeping in, because this is April's data. So right after the tariffs were announced. So we'll need to keep an eye on that to see if we see inflation creeping in or not, or if it did indeed back off.
Yeah, I mean, so if for those of you who don't know who Nick Timiraos is, he's a writer for the Wall Street Journal, and his main mission, his main focus is everything FOMC, interest rates, inflation, and not only that, his commentary. I think you should follow him on X. His commentary it's not biased. It's very, in my opinion anyway, it's very, analytical and very common sense. So if you're an interest rate follower, which you should be probably, and an FOMC person, definitely follow Nick. He's terrific.
Yeah, absolutely. And word on the street is he does have some inside scoop with the Fed and has relationships with them. So sometimes he kind of leaks whatever information that they may want people to know. So he is a good follow for that. Absolutely. As far as headlines this morning, again, not a lot. We had B of A come out and say U.S. tax cuts risk sparking a new market bubble. Their chief strategist, Michael Harnett, his view is that bonds and international stocks and gold are the ideal allocation mix this year, but he warned there may be an all-out bullish scenario which would pose a risk to his outlook for 2025, and that would be the tax cuts that are coming.
Okay, I got it. I got it. So, I mean, I'm just kind of like looking across the board here. Everything's pretty subtle. I mean, we've got equities are pretty much unchanged. We're not close to rolling over yet. We're still in the June mini S&P contract, as well as the other stock index futures that we follow. U.S. dollar's a little bit up, but I don't see a lot of big numbers. Yen is flat, by the way. Crude's down a tad at a 60 handle. Should we be looking for a 59 handle here in crude, Tracy?
So we'll see. Well, what Crude just puked. Not surprising because there's a lot of headlines out on how OPEC Plus, they're meeting this weekend, is expected that they are going to increase production again for July at 411,000 barrels per day. Every time a headline comes out that kind of says that, oil pukes again. I don't understand why it keeps puking on the same headline for the last week, but it does. So we'll see. I think my next level down, if it does not hold here, and I mean literally right here at the 60 spot 64, is 59.45. So that's my next target to the downside. Again, if it does not hold at this exact spot right here.
Yeah, I'm going to pull this daily chart up really quickly here. And you could see this big red candle where Tracy mentioned this puke. We literally traded above the pivot briefly. Nice kind of orderly rally though after the London session. The London initial balance kind of was really bullish, and this thing kept moving all the way a little bit north of that zero DTE call gamma wall, and then we kind of just boom. This is we get these kind of moves every once in a while on crude,
Like
don't
I
we?
said, I said we just puked. I know, right? It's like a knee-jerk reaction. So we'll see. We did have the Dallas Fed Energy Survey come out. I posted it yesterday on Twitter. And what did it say? It said that according to the latest Dallas Fed Energy Survey, U.S. drillers need between 26 and 45 per barrel to cover operating expenses at existing wells. However, to drill new wells profitably, they require prices starting at $61 per barrel on WTI, with some areas in the Permian needing 70. So, the longer that we stay at these depressed levels, I think when we get Q2 earnings, we're going to see even more of those E&Ps come out and cut CapEx again. We did start to see that in Q1 earnings that we just had, but I think, the longer that we stay at these depressed levels, you're going to have a lot of E&Ps kind of revamping their CapEx plans.
Yeah. So I mean, we're about to make new lows right now as we speak here. Look at that go. I mean, we just broke through previous sessions lows right now. We broke through that 60 spot 50 level, which is a gamma level, and a blind spot as well from Mentor Q. And look at this thing go. It's still it's still moving. It's still moving. So if you guys are trading crude, I hope you're short right now. So, Tracy, on a side note,
So
I took that long car ride through Texas, right through State Road 20, last weekend, and I noticed something I wanted to ask you about off camera. I forgot, so I'll ask you now. I saw an awful lot of flaring, right? This big, like flame shooting
yep.
out. Is that a normal phenomenon?
That is a normal phenomenon. We produce shale wells are very, very gassy, and they're getting gassier. Kind of the more they try to extend the life of those wells with technology, so they get gassier and gassier, which means they produce more nat gas, and we produce a lot of nat gas here. So a lot of times they have to flare the natural gas off to get the oil. So you do see a lot of flaring going on in Texas for certain.
Yeah, no, it was noticeable. It's because, how often do I drive through Texas? Well, never. So it was an interesting
Well,
phenomenon.
never.
So we have our guest today is I've never met Blake,
Blake
but
Morrow.
yeah. Tell us a little bit about him.
So Blake Morrow is great. I've known him for years. I've met him actually in real life in Vegas. We did a money show together. He is been in the business for endless. He is a Forex trader by nature. That he is a co-founder of Forex Analytics, but he's traded everything. So we'll get to talk to him about currency markets and about, I want to talk to him about a lot of these commodities that he follows all the time. So it'll be really good to talk to him this morning.
Yep, I'm looking forward to it. I went through my brief Forex. It wasn't brief. We had several years we were in the Forex business back in the day. So I'm looking forward to definitely meeting him for sure and then talking to him about it as well. So looking forward to that. We'll take a peek at the yen. The yen's been in the news. Euro FX also. I mean, we've had some, ECB folks are out there, coming up, basically saying, I think it was Panetta today said something about, yeah, we think this disinflation is over at the ECB. I wasn't sure what he's talking about, but it didn't sound like he was being bearish. So I don't know.
And a side note, we do have a Trump press conference today, I think at 1:20. He's having a press conference with Elon Musk to kind of say goodbye, as Musk is technically leaving his government position. And he also has a press conference on steel, but that'll be after the market closes.
Okay. Well, now maybe Elon could get back to business as usual. So, but
Right.
he's not going away though. That's for sure. In other markets too. I mean, gold right now is down a tad bit. I mean, we're still at a 33 handle. A little bit of a sell-off this morning. Nice point of control is kind of being developed
Well,
right
it's
now around 33.17. But it looks like this
a little
pivot
bit on the
level
move,
here.
though, right?
Say that again, Tracy.
Kind of on the move as well, right? I mean,
Yeah,
look
yeah,
at that
for,
candle.
yeah. Buyers are coming in right now. It's interesting too because the data we're up against is at 8:30. It could be formidable data, right? We also have that international trade in goods. I don't know if that's uh, a market mover or not, but that also is coming out.
Probably
Yeah.
no. Yeah, we've got University of Michigan sentiment. If you remember, it was terrible last
Mm,
time, uh, but that was because that survey was taken literally right after Liberation Day. So now that this new survey is kind of a month into this already, so we'll see if that sentiment has shifted lower since we haven't really seen you know huge inflation due to tariffs yet. So that'll be interesting, I think. And then also their 1 year and 5 to 10 year inflation expectations. So we'll see.
yeah.
Look at
Well,
gold on the move.
it is, man. It's catching a bid right now. Well, everything's kind of moving right now. So, I mean, even the S&P is down 30 all of a sudden. Nasdaq down 113. So, as we are speaking, hopefully it wasn't us.
Oh,
Hopefully,
so Trump says, here it is. The headline just came out. Trump says China violated its agreement with the U.S. That's the headline. Everything's moving on right now.
oh boy, there we go. More unplanned news from the White House. Well, the one thing I did notice though is a way to introduce our guest today. Is I was checking out his website today. He did have a Liberation Day sale. So let's bring in Blake. I think he's ready to go. Pretty
Hello.
good, pretty good, Blake. Hey, it's great. It's great meeting you. I appreciate you being here with me and Tracy today. I was in the Forex business for a long time with, if I don't know if you remember FX Solutions back in the day,
Of course.
Bobby Courtwright, Tom Plowton, those guys. And then but our focus is really on the futures FX market, which is a great market. So we love having you here, man. And I guess let's just start off talking about what's going on. Let's talk about the yen because there seems to be a lot of things going on with the yen US cross.
Okay. Well, I guess we can. Well, depends how you want to. How do you want to frame this? And it's funny you asked me about the yen. If I could tell you that there's one currency right now that I don't have a really good feel for, it is the yen,
Oh no.
because it's hard. It's hard to know if it's being driven by yields, and what the yield effect is on yen, which is, obviously what we've seen is as yields have been moved higher, the market is selling dollars because they're worried more about, the U.S. fiscal situation. So when you get yields up, dollar usually goes up, dollar yen usually goes up, but in this case it hasn't been. And then plus, you have the risk aversion factor, which obviously we're seeing today. We're seeing the situation where, Trump just was on True Social, basically, defending his taco trade, or let me rephrase that. He was defending himself because, people were saying Trump is too chicken, or oh, his chicken's out, blah, blah, blah. Anyway, he defended himself, said China's in violation on True Social. I actually just spun out of some dollar shorts as a result of that spike. But what we've seen is the yen actually push lower, and it actually just pushed below some fib levels. Then your third issue that we have, Jim, is CFTC positioning. This is the most aggressive we've seen in history of all of CFTC positioning reports. That the fast money hedge fund institutional community is longest yen they've ever been. So, and ultimately they're expecting a move below 140 eventually. That's been the expectation for the last several months. So as a trader, we've been able just to pick it off. Every time we get close to 140, we know that the market's extremely long yen or short dollar yen. So you just keep getting long closer to that. But now it's getting a little dicey, with stocks getting a little, wonky, with trade deals may or may not going through with Japan, how the yen's moving with yields. It is getting a little bit more, like I said, wonky. So for me, it's not as easy of a trade. And so you asked me about the hardest currency at the moment. So thank you very much.
Oh, so let's talk. Let's move over then maybe to the euro. Talk a little bit about that, and also, let's talk about. Currencies have been really volatile. So let's talk a little bit about
Very
the euro,
well.
and then kind of how you're kind of managing that risk, because we have got a lot of traders obviously listening to this, and some newer traders, but everybody can learn a lesson about managing risk. So maybe talk a little bit about that, because really we have seen just wild moves in the currencies where we just don't see those kind of moves.
Thanks for the question, Tracy, and by the way, great to see you. So the euro is, probably more my wheelhouse right now because I think it's underloved and it's hated so much, and it's holding its gains. And the fact of the matter is, euro's above. If you go back to the 160 level, the all-time high in the euro, you just draw a trend line across the tops all the way down. You have to go out on a weekly chart and go back 12 years, 15 years, or whatever it is. We've broken out to the upside, and we're holding that breakout point. Even the dip below 111 was testing the breakout trend line, and we held it. Now, the thing about the euro is euro's dominating and will continue to dominate in fiscal spending. By the Trump administration basically backing away from protecting Europe. Europe has to fend for themselves. Their fiscal spend should outpace what we're going to be spending in the years ahead. And I've had a lot of discussions about, dollar reserve status. Is it going away? And I that's a bunch of hogwash as far as I'm concerned. The dollar has been the reserve currency for 40 plus years. The euro has been as high as 160, and we've been below parity. So we're at the lower end of the range. Even if the euro gets to 130 to 140, it's not because it's losing reserve status. But what is happening, in my opinion, is that this volatility that you're seeing in currencies is predominantly driven by the dollar. Why? Because we have a Trump administration that's at the helm that doesn't want a stronger dollar. They're very erratic in their behavior. And if you are I was using the example, like, let's imagine you're the Republic of Tonga, out in the Pacific, over by New Zealand, and you have like all your reserves in dollar reserves, and you got like a majority of it. Let's say 65% of your reserves are in, because they're very Western friendly. Well, they're probably looking at the Trump administration, knowing that they want to weaken the dollar, and they've got all these dollars they're holding, and all these headlines keep hitting their balance sheet. They're like, you know what? We're going to have to move some of that, and we're going to, instead of having a 65%, weighting in dollars, we're going to move it into something else. And everybody's like, well, where else do you go?
Yeah.
That's not necessarily the question, because it's not like the dollar is going to lose its reserve status. But instead of holding so many dollars, maybe you buy some euros, maybe you buy some Aussie dollars, maybe you buy some sterling. And so I think what the euro is a byproduct and a positive byproduct of dollar diversification right now amongst institutions, central banks, pensions, hedge funds globally. And I think that's going to continue. And it probably is going to end up continuing for the next 3 years, as we embark on this trade war globally. So, and these headlines, the ones that you just saw, the ones you just witnessed, literally, 12 minutes ago from Donald Trump himself on a Truth Social post. Think about how that affects your dollar holdings. You were just up X amount in your dollars, and just one post has shifted your balance sheet by a 0.25%. And you're like, that can't happen. So I think the euro is just, like I said, a byproduct of this. Now, am I bullish euro? Yeah, I'm long. I am talking my book, but I do eventually expect the euro to trade up towards 120. And so I'm a dip buyer, and I continue to be a dip buyer. On any dollar strength. I think the dollar is going to have it's going to be like a kind of kneecap for the next couple of years. And then we haven't even talked about growth and monetary policy either.
So Blake, if I could just pop in real quick.
Yeah.
So, ECB's got a lot of members, right? A lot of board members at the ECB.
Yep.
Panetta this morning is literally saying, hey, disinflation is now close to completion, right? And so is the thought process there that, hey, maybe we're going to kind of follow the U.S. in slowing our roll on any rate, any key rate adjustments?
Absolutely. I think they are as well. And I think that's every central bank, right? So if you're expecting a more like so many, I saw a comment, I think was from some Goldman Sachs analyst yesterday. It says, it was traveling to Europe and said, basically, I'm so glad to be an American after being over in Europe. It's like, people have this like downbeat view of the Eurozone, but frankly, it is a kind of a bastion of stability right now. So yes, as far as monetary policy goes, yeah, I don't think they're probably going to be dealing with deflationary forces, and I would think that we might be too, to some extent, with this big tariff war. So I think all central banks are going to be moving in unison, which I don't like. As a currency trader, Jim, this is. We want to see divergence of monetary policy, but I think right now most central banks are going to be moving in unison for the next year and trying to navigate through this trade war that's global at this point.
What do you think BOJ is going to do? Because it seems like they've been raising, while everybody else has kind of been lowering, even though the U.S. has been, holding steady. So do you think they're going to continue to raise, or do you think they're kind of done and maybe lost control of their yield curve right now?
That's a great question, Tracy. And the last BOJ meeting, which I'm not good with dates. So I could say it was a couple weeks ago, and that's about as good as you're going to get from me. I'm not a good, throw out a date real quick type of person. But the BOJ in their last meeting, if you listen to Ueda, they're basically not as hawkish as the market wanted. And so I am, again, I kind of question what the BOJ is going to do from here. I think a lot of central banks are going to be, in wait and see mode. And, I think if their economy continues to perform well, sure, they would be more of a candidate of potentially raising rates and normalizing them even further. But at this point, I think most central banks are in the wait and see mode.
Yeah, absolutely. That makes sense. What are your thoughts? I want to get also your thoughts a little bit on some other commodities like gold and silver. I know that you watch those as well. Kind of seems like we're in a we made this huge move up in gold. We're kind of in a sideways pattern, so to speak. Surprising that the markets have accelerated so much, the indices, but yet, one would expect kind of a bid out of gold, but we're kind of not seeing that, right? It's still kind of holding at these high levels.
Yeah, it's interesting, Tracy, about gold. I'm not a gold bear. Let's put it that way. And we had on our show we had Carly Gardner. You may know her. She does a lot of technical analysis for Jim Cramer. And she said something like, "Oh, it's a blow off top." And I was looking at her chart, going, "Yeah, I don't think so. I think when you consolidate at an all time high, it's not a blow off top. It's a blow off top when you see some sort of capitulation type of move. So right now, it looks like more of a consolidation before another move higher. And you've got every reason in the world to be long gold. And I always try to shoot holes in theories and analysis and say, well, why should gold go higher? Why I can't argue gold going lower. I don't like it when I feel that way, but I've also felt that way for the last 6,000 points. So therefore, I don't feel there's any reason to stand in front of this freight train. Especially when you have the whole world really focused right now, laser focused on what's happening in auctions, yields. You can see yields are rising. People are worried, globally, not just about US debt and deficits. They're worried about everybody. Look at Japanese auctions. You start looking at yields all around the world. There's no reason why, in my opinion, you should be standing in front of gold. I do know that if gold trades below 3150, that's where, if I was long and we were below 3150, that's where I would say, you know what, it's probably time to trim some longs. And that's kind of where I stand with gold. Being not a gold trader at the moment, just a gold investor that I hold my own bullion, but not as far as the trading goes. I have my hands off at the moment.
So we're going to hold that thought for a second. We're going to cut in a minute to some live data. Tracy's going to walk us through it, but I do want to tell everybody quickly in the chat, or everyone who's listening to us, that you are on X, the Pip Czar. That's how we could follow Blake on X. So pop in. It's got some great stuff there, folks. Tracy, we are getting close to some data hitting the street here.
Right. So let's just kind of go over what the expectations are. Obviously, we have core PCE, which is the Fed's preferred inflation index. So expect core PCE month over month is expected at 0.1%, year over year at 2.5%. We also have University of Michigan sentiment. As you recall, the last time it came in, it was horrific. So prior was 50.8. Survey is 51.5. Inflation expectations, University of Michigan, again, 1 year is 7.1%. And the 5 to 10 year expectation is 4.6%. Now, if you remember, when that survey came out was right after Liberation Day. Now it's been a month later, so we'll see if sentiment has changed a little bit from those levels. It looks like they're expecting a little bit of improvement, but, let's see what happens. And so here we go. Here comes the data. So we have GDP came in at, all right, hold on, here comes the numbers. Sorry. We have personal income, 0.8%, expected 0.3%. Core PCE price index, month over month, in line, 0.1%. Year over year, in line, 2.5%. Still waiting on University of Michigan sentiment and inflation expectations. Personal spending, 0.1%, expected 0.0%. Most of these numbers right now are in line. Personal income is higher.
So we're
And
not.
still no University of Michigan yet.
So I mean, right now I'm just kind of looking at the reaction of the E-mini S&P really quick. And we're just again, we're back at that 5,900 level. This is the gift that keeps on giving. We've been tracking this 5,900 level for a few days right now. So no major movements there on this. But this kind of really begs the question, not begs the question, but kind of highlights um, currency traders have this challenge, right? Because not only do you have two sides to a currency pair, and Blake, this is something that I've always, really found a little bit harder to deal with because you've got what's going, depending on what your currency pair is, you've got, domestic economic releases on both sides of the pond, so to speak, and then you have, of course, the interest rate differential and those other dynamics. What's your approach? What's your approach with respect to that?
Well, first of all, you always look at like the bigger economy is going to be more of the driver. So, when you're matched up with dollar pairs, you're obviously just focused on more of the U.S. data. But then you have to look at other cross rates based on liquidity. So, like for example, if I'm trading the dollar and I'm trading like the euro dollar and the euro and the pound dollar, for example, or we call it the cable. I might be focused on what's happening in euro sterling because that's a very highly liquid currency, probably one of the most liquid currency pairs in the FX market because there's so much trade between Europe and the UK. So if there's a big technical break or some macro reason why the euro sterling is going one direction or the other, I might be a little bit more focused on that one currency that has the higher rating. So that's kind of my approach when I'm dealing with currencies. We always think about what is the driver and what is the main driver of whichever way you think the market's going, and then you have to look at the counterpart and say, okay, is there anything standing in the way that's going to stop this move that you're seeing? And I love always having a macro thesis. I think that's one of the byproducts of being a currency trader since about 2001 when I switched over from trading equities to currencies is I've become more of a macro by default type of trader because I take it all in as I'm trading. One of the things I did want to mention this about the PCE, which I find fascinating, Tracy and Jim, and I think you guys might find this fascinating as well. Powell's alluded to, and even on the 15th of May, one of my colleagues, Ryan Littlestone, who was one of our European traders, he pointed out that Powell has on the 15th said that PCE was going to come in at 2.2%, and we're like, oh crap, he gave it away again, which he's done the last three PCEs. It came in a little weaker at 2.1%, and that's something that I think we should be noting as we're as we're going into today's data. So.
Yeah, it seems like, I don't know. We have this war between big data coming in and then what someone might say on Capitol Hill out of the blue. So,
Right.
What one post moves market moving one post on True Social. So interesting times we have.
so we have Blake for a couple more seconds. Tracy, any other markets off the top of your head that Blake could run through real quick?
Yeah, I don't. I know you watch crude oil. Thoughts on crude oil? As you know, I always watch that market.
I'm glad that you brought that up, Tracy. I was going to ask how you felt about that headline that came out this morning about, OPEC, but the sources, it's always the sources, right? The sources say that output was going to be increased to 411,000 barrels per day, something like that. So
Yep.
I mean, 60 is obviously key. It's holding right now. I'll assume if we break 60, we're trading back in the 57 to 55 range. I think, but I guess the point is the 60 to 64 range has been such a tight range for the last month or so that a breakout's a breakout. A breakout should yield some sort of acceleration. Wouldn't you agree?
Oh, absolutely. I mean, it's going to go one way or another. What's interesting with this Saudi headline is we've had the same headline literally every day this week, and the market still reacts the same on it. I'm like, is this not priced in yet? What? So we'll see. OPEC is meeting this weekend.
Traders are always looking for something to cling on to, and we all have ADHD big time. So we forget that headline that happened on Friday. We'll forget it by Monday. We'll be looking for the same headline on Monday that we got on Friday and Wednesday as well. So, what can I say?
Awesome. Well, Blake, we really appreciate your time. I just do want to mention again the pips are on X, and then also your website, Forex Analytics, spelled a little funny at the end, TIX. Forex Analytics up there. You still have that Liberation Day sale. So folks who are listening, definitely follow Blake if you get a chance.
Thank you guys for having me on. I appreciate it, and good luck today and TGIF to all of you and your listeners out there.
Can't wait to talk to you again.
Same here.
Thanks, Blake.
All right, Tracy. That guy was awesome. I could talk to him for hours about this stuff. He's really a subject matter expert. He's really good.
Oh, he's fantastic, and he studies everything from macro down to trading on a daily basis. So he's a great guy to talk to. Wealth of knowledge. So love talking to him. And he mentioned Ryan Littlestone. He's actually going to be on in 2 weeks, so we'll get a chance to talk to him as well.
Awesome. Well, keep lining them up. This is awesome. I love meeting all your friends.
All right.
All right, folks. We are going to move into an edge report. Let's do it. All right, well, let's start with the main event anyway. The E-mini S&P right now is, kind of a pause today. It's kind of back-to-back pauses. Yesterday was a complete doji. Today's a little baby candle. We're resting on this long-term, loosely fitting trend line that I drew. Moving averages are arcing up slowly. They're starting to slow down a little bit, but it's kind of subtle. The stochastics are kind of slowing down a little bit as well. On the daily, but again, it just is this consolidation right now. Last time I checked, we were about 3.46% off of the February 19th highs, the all-time highs, which is actually astounding to me, given the fact that we started this rally back on April 21st. Just kind of digging down into an intraday chart. Tight range today. I misspoke earlier for sure. Really tight range right now. The tops was at 59.23. We did have this little bit of a probe wick, as we'd call it, at 58.76. And right now it's a relatively decent volume profile. Point of control is situated right here around 59.08. So that's not bad also. But look at this range. Other than this big candle here, other than this big 30-minute candle that we just saw between 8 and 8:30, the range has been tight, and we're driving back up into that range. We have a Menthor Q high vol level at 59.05. And if you remember my earlier comments, we've been tracking this 5900 level for a long period of time. It's kind of sticky over the last few days. So I wouldn't be surprised if we continue to see this throughout the day. Previous session's lows, we wicked through it real temporarily, but that's at 58.83. That's an area of interest. And then that one-day min, that Mentor Q's one-day min is right here at 58.66, right next to S1. So there's two areas of interest right together for the bears. Below that, there's some targets here. S2 is pretty far away, actually, on the downside, 58.12, and then that ultimate put support at 5800, that even level. For the bulls, JAX 3 is kind of defining the top. We haven't got the JAX 3 yet. 59.25. The daily pivot is up at 59.36, and then JAX 1 is way up there at 59.50. So pretty tight range. Even during the London initial balance, we've had a tight range, right? The lows were at 59.02, and then the highs were at 59.17. So it's pretty tight, movement there. That is the story on the E-mini S&P. Let's just toggle over the NASI while we're at it. We've had some NASDAQ earnings in the news lately, but this chart's looking pretty similar. We do have, I'm going to draw a rectangle. I could do that. Rectangles are free on the NinjaTrader desktop platform, everybody. I'm going to go ahead and just draw one just to kind of think where is resistance at right here. And this is kind of a long-term area of resistance. This isn't, this didn't happen yesterday, right? We have not had a body of a candle complete or close or be involved with prices above that 215, I'm sorry, 21,533 level. And it's still to this day. Yesterday we wicked through it. We came right back down. Today we're just sitting on that ADMA. Like, okay, we're sideways. We're happy. Baby candle, not a big range again. And moving averages, they're still gently sloping up. This anchored VWAP that I have is miles away right now. And then we do have a cross under, though, on the stochastics. Now, the cross under is happening at above that 80 level, which is a little less, it's not a red warning for me. If it was in the middle of that, between 80 and 20, I would probably be a little bit more sensitive to it. But stochastics are arcing down, so we'll keep an eye on that. To see if that's going to suggest continuous bearish movement or not. Intraday charts, we have some really great, excuse me one second. I just got to move this window out of the way so I could see a little bit better. Intraday charts, this is a 30-minute chart. Zero DTE put support. We wick through it. S1 is a little bit further down here. S1, and again, just like the E-mini S&P and that one-day min from Mentor Q is pretty close together. So that's kind of going to be a range or an area of interest for me if this thing gets bearish. And that's at 21,000. That starts at 21,170 on the downside. Yeah, there's some more targets down a little bit lower here, including that even number where that blind spot is at 21,000, and S2 is way below that. But again, anything could happen. We could have a big range day today, but it doesn't look like it's kind of setting up for that right now. The volume profile here is picture perfect. If I was going to write a textbook, I would cut and paste this in there. It's a Gaussian distribution. It's a bell-shaped curve. It's a point of controls right in the middle. There's a lot of balance. Yeah, maybe prices below value extended a little bit deeper because of that wick that we saw from that 8 to 8:30 candle. But other than that, it's a pretty tight volume profile today. On the upside, JAX 1 is kind of framing the conversation. JAX 1 is right approximately 21,425. That's that big gamma exposure level. Let me just pop this over here real quick, guys. There we go. Much better. On the upside, we do have some targets as well. We have the pivot, which is just above that zero DTE call resistance level. That's at 21,515. And then JAX 2 is also right above that, and that's at 550. And then JAX 4 is right above that. That one-day max is way up here, though. Remember, one-day max is way up here. The ATR, we've got, let me just show you my ATR column so you could see it. I have this daily 14-period ATR calculation going on that I like to look at. 437 points is that ATR. It's Friday. I don't know. Maybe not. Maybe some more numbers will come out to move this thing around. But right now, super tight, almost an equal and opposite candle forming on this 30-minute candle. As we're getting ready to move into the opening range. I'm going to go down to the 30-year Treasury bonds. This has been an interesting phenomenon, and I have a September chart up. Remember, we rolled over. Let's let this guy percolate a little bit. And it's interesting that we're kind of out of the trend channel here. Let me just let me exaggerate this y-axis a little bit so you could see it. We started selling off back here on the 30th of April. And it's been a pretty steady Freddy kind of sell off, right? And we kind of slipped below that ADMA back there on May 7th, and we kind of stayed below it until a couple days ago we peaked on through up above my trend channel, and then we tried to attempt to get back in again, and then nope, we just rallied back up. So I have an old support resistance line. You can see that rectangle right there. We're bumping up against it. That's about between 112 in 26, 30 seconds in 113. So that's kind of the zone there. And so it will be interesting. I'd like to see a close above here. If we see a close above there, and above that 21 EMA, that could be significant. It's been a little bit of a rally since we hit those peak lows. That's 110. We did have a 110 handle even handle print, and now we're at almost a 113 handle. So that's almost $3,000 per contract move up in this market. Stochastics are nicely moving up again, suggesting maybe some bullish conditions here. Last time I checked, yields were still hovering close to that 5% level. The cash yields. Intraday, what do we got intraday? Again, small kind of, not a big range so far. The call resistance has kind of defined the top of the conversation here. This is acting as resistance. Yeah, that's it at 113 even. We did have a candle close a couple of ticks above that at 113.02 with a little bit of a wick probe up there as well. And that was, 330. But other than that, this area has been holding pretty good. So if you're day trading this could be a key area of interest. As a matter of fact, I'm going to draw a rectangle there, right there, just so I could see it better. If we do penetrate through there, we do have that JAX1 level and R1, two areas of interest that are right next to each other. That's at 113 and 16/30 seconds. So again, I don't know if we're going to get that breakthrough today that I'd like to see. I don't know. Maybe there's more data coming out that could do that. But we tagged that JAX2 level on the downside. The bears are like, yeah, look at that. And that's at 112.16. This perfect. It was a perfect tag. And below that, we have the pivot, the daily pivot, and that's it, 112.10. And below that, we do have a high vol level at 112 even, just north of that Mentor Q 1-day min. So again, this is kind of the theme today, guys. It's like, all right, we're going to have some tight markets today, until they're not, right? It's like, Roadhouse. It's like, be nice until it's time not to be nice. Right now, market is nice. Good morning, chat. Chris is here. We have Trading Boxes. Christian is with us today. Great to see you in the chat. Appreciate you being here. A lot of familiar names. I almost said familiar faces. A lot of familiar names in here. Appreciate you being here, especially on a Friday, right? It's like summertime's rolling in. Maybe it's time to go to the beach. But I appreciate everybody being here. Engineer Bear, good to see you as usual. John, I'm glad you're with us this morning. I'm glad everyone is with us this morning as well. Anthony is here as well. Deli is in the house. Cheers, Deli. Let's keep moving, though. Let's go to gold. We talked about gold a little bit. Let's let this chart percolate a little bit. I got to let my data come in here as well. Gold's down $16, give or take. Let me see if I can get it. It's going to percolate here a little bit. So hang tight. But this is the August gold contract. Nice area of resistance. You can see my little mini rectangle here. That's at 30. That starts at 33.65, give or take. And then I could probably draw. I'm going to do it. I could actually do it because remember what I said earlier. Rectangles are free on NinjaTrader. And just kind of define the support level right there. So again, another picture of consolidation happening. This is 1, 2, 3, 4, 5, 6, 7, 8 days in a row. We did have that crossover though. That 8 EMA crossed over that 21 EMA back on the 21st, and that's usually a bullish signal. And we did have a couple of days of movement to the upside right now, but we're kind of sideways here. We're stabilized sideways. Really high price point. 33.27 is what we're trading right now. Stochastics, yeah, they just dipped above overbought, but I'm not buying it. We'll see how long it sticks there as well. Intraday, again, relatively small range today. Let me adjust my scale here a little bit. Point of control a little bit further south today. Just kind of draw my crosshairs here. I like to draw my crosshairs at the point of control when I'm thinking about the session. And I look at how many candles have traded through that price throughout the session. And these are 30-minute candles. You could do this on a 15-minute, a 10-minute. It doesn't matter what time frame you're looking at. But it's almost all of them. The answer is almost all of them. So when I see that, to me, that becomes price happiness, right? 33.18 is kind of equilibrium. And I would even kind of extend that to say, hey, between the point of control and that pivot, we see an awful lot of time frame pricing here. And that tells me, okay, this is where this market wants to be right now until it doesn't, right? Until we get some news or something happens or the order flow changes a little bit. On the upside, we have that Jacks 2, blind spot 1, kind of defining the conversation there a little bit at the top side. Above that is that 0 DTE call resistance level, gamma wall 33.50. Previous session's highs 33.56, and then we have Jacks 3 all the way up here at 33.60 for the bulls. Should we get a breakout to the upside? The interesting thing about gold, and I think when I look at the London initial balance, that's that purple line. These are these purple parallel lines that are kind of bracing around these two candles. And in gold, a lot of times it's really important because there's a lot of gold activity that happens when London opens up, right? Today, we've had, the highs were at 33.25, the lows were at 33.11. So we're talking $14 range right there. Not too big. But the thing that strikes me is we have this buyer's wick here, and this is from 3 to 3:30 candle. We have this decent buyer's wick here. Buyers came in and we tried to make new lows, couldn't do it, stayed sideways, and now we're kind of inching up again. So we'll see. It's kind of a dynamic between being a little bit of bullish and this point of control which is being pretty sticky right here. On the downside, that one-day min for Menthor Q, we never got to it. That's 33.05, and then that 33 even number is a little bit below that. If something happens on the downside, we do have some more targets, though. We have that H vol, that high vol level of activity at 32.90, and then S1 is right below it. So anytime I see two areas of interest, I like to call them areas of interest on a chart. Then it kind of is. I write it down, I think about it, and then if something does break, that could become a target or alternatively an entry level as well. So that's why I kind of like to look at that on the chart. Let's keep rolling though. We haven't talked about copper for a while. Copper's up a little bit. Let me get my chart going here. This is probably one of the most interesting charts that I've seen because again, I kind of look at the candles and I kind of put my crosshair there and it's like, how many candles have we traded around that 5-spot 70 level? And I'm going to say, well, just about every single candle since since the end of April. Everything is kind of flatlining, right? Yeah, we had a little bit of a price bump here. This is probably a news-based reaction. But then real quickly, within 3 days, we settled right back down to that sweet spot around 4.70. All the moving averages are just touching. This is the 8, the 21, the 50. This is flatlining, right? And I could extend my anchored VWAP if I wanted to, just to see another price point. And again, that's also flatlined as well. So copper prices have been in this long period of sideways price happiness, I'd call them. Even with the backdrop of stochastics crossing under right here, this should have been a really good short signal, right? I mean, a longer term short signal, and it really wasn't. And this kind of goes to tell you, hey, a lot of times when you do moving average crosses or stochastic crosses or CCI, commodity channel index, whatever you're tracking from an oscillator or from a moving average point of view, it doesn't magically always do what you'd think it would expect. I mean, we have separation between those two lines too, which should also be more bearish than it's showing up on the chart. So remember that. That's a 14-period calculation on Dr. Copper. Let's check out while we're at it, let's go to an intraday chart here as well. Look at that. We tagged that R1 level. That's a pivot level, resistance 1 level. Blew through that 0 DTE and gamma wall right there. That's pretty close to that 4.7 level I've been talking about. A high vol level is actually at 4.7. No surprises there. Volume profile, not that great because we have 3 competing points of control, right? We have the official point of control, 4.69. 2, we have a competing one a little bit lower, 67.40. We have a competing one even lower than that, 65.40. So we'll see if this matures throughout the day. In other words, just becomes more of a normal distribution, or if this is a nice creep up, right? And one of the things that I would like to suggest real quickly here, and I'm going to do that with a rectangle, the famous rectangle. We had, after London initial balance, we've had a lot of resistance up here at 4.693, right? No bodies of the candle, just probes, just wicks trying to break the ceiling. And then finally, this particular 30-minute candle did the trick. So a little bit of a movement up here. And remember, folks, there's a micro contract here. If you're interested in stepping into me and Tracy's world a little bit and experimenting with some of the commodities markets, right? This is a good one to do, this is the good one to take a peek at. It charts nicely. The macro story is great, and it has some movement in it too. So don't be shy. Try that. MHG is the ticker symbol. Try that if you get a chance. All right. Do I have a few minutes left? I do have a few minutes left. We're going to move over to the Bitcoin. This has been a really, I don't know. This is an interesting phenomenon now. It's almost time to draw a fib line. I haven't drawn it yet. And just if you look at the ebb and flow of this market since the beginning of April, we had kind of a rally and then a pause, a rally, pause, a rally, pause, a rally, but now we're not seeing a pause anymore. We're seeing a retracement. We're seeing this, we're seeing it's not a sideways movement. We're breaking back through my area support, which I just have pegged right there at 107,470. And we're below it right now. Today's a baby candle with a baby body so far. But now it looks like money is subtly coming out of the Bitcoin market. I know Tracy talked about the influx into Ether yesterday, Ethereum yesterday, and that could be part of it, part of the toggling between the different markets within this asset class, the cyber currencies, which are here to stay, folks, by the way. The other indicator down here at the bottom, this is the stochastics. So we crossed under. We have a cross under on the stochastics. It happened above the 80 level though, so it's a little sus, but it's still something. And that yellow line, you see that yellow line down there, that's moving pretty nicely down. We're getting separation between the two lines, so we'll keep our eye on that to see if it continues its downward trajectory. Intraday. And by the way, if you haven't traded the Bitcoin, the micro Bitcoins are pretty good contracts to consider. So today, when I just look at this chart, I'm thinking two things. One, I'm thinking, where is the session VWAP, volume weighted average price? And is it helping me decide if I want to be bullish or bearish? Right now during the London initial balance, we sold. Sellers took charge, broke below that VWAP, tested some lows here, and then we've since kind of traced back up. Now, right now, we're kind of trading right above that session VWAP. Ever since, well, we crossed back over it to the upside at 6 o'clock. So this is kind of like a line in the sand for me right now, thinking about my positioning. And yeah, it's still buyers are in control a little bit, but we're right at that VWAP here. So it's definitely not obvious what's going to happen next. So a couple of targets. S1 again, forming the floor, right? This is a nice kind of double bottom. If you think about bottoms in terms of wicks on an intraday chart, that's at 105,345. We have a JAX one level down here at 105, 105,000 even here, and that's not surprising. A lot of these gamma levels are at even numbers, not all of them, but most of them. So that's again would be for if you're bears today, that could be a decent target. Below that, there's not a lot. You've got S2 down here to consider, 103,975. For the bulls, we have JAX 2, which is the second most important JAX level. That's at 107, pretty much 107, 107,000. Above that, though, we do have some additional targets. We have that Mentor Q blind spot, which is 107,320. Zero DTE, again, is right up there by the pivot. 107,565 as well. Above and beyond that, should we get a breakout to the upside, that JAX 4 level sitting there at 109 even is probably a good level to consider. Wow, what a morning. Yeah, the Strat attack is going to be here briefly. Sand dollar 77. Good to see you. Thanks for being here with the emojis. I love that. Um, Theo, good morning from Chicago, my old stomping ground. I'm torn between whether I miss it or not, to be honest with you. Um, it's being in Charleston right now is I just love it down here. It's the weather's great, the people are great. It's culturally different. Yeah, I know it's a weird thing to say, but it's culturally different. But I guess I do miss Chicago, my friends up there. The city's awesome, by the way. Gary says Fridays. Ugh. What do you mean? Trader Ward, Jim, why don't you use the midpoint pivots? Well, I don't know. I never thought of it. So I could add it though. I will definitely add that Trader Ward and tell you how I feel about it. For sure. Just hello to everybody, man. Thanks for being with us today. Yeah, Sarah's going to be with us momentarily, so hang tight there. Let's take a look, see if anything's changed in the E-mini S&P right now. And again, we're still in that June contract. And the reason I put my September contract up is because I just want to check the look. I know rollover is not yet, but I just wanted to keep an eye on the volume differential. Right now, we have 174,000 contracts traded in the E-mini S&P. The September contract only has 1,000. So we're nowhere near rollover. That's how I do it. I like to look at that volume, right? You want to trade the contract month that has the most volume because the bid-ask spread is going to be tighter. And, like it or not, the bid-ask spread is part of your transaction cost. Right, it's part of your transaction cost, especially when you're entering with market orders or you're exiting with stop market orders. So that's why I did that. But let's kind of toggle back over there real fast. Take a peek. So again, not a lot of movement. I'm just going to go ahead and measure high to low. I'm going to use my ruler again. And change it. I want to change it to points. So I'm just going to double click on that ruler and we're going to go ahead and change it to price. Boom, boom. And we have a 40, so rounded up to 47 handle high to low today. That ATR again is 100. So, why am I even mentioning that? Well, if there's a breakout today, one way or the other, and you have confirmation on that breakout, then you could kind of use that ATR to think about what the potential is of a continuation move, right? And there's a good 50 handles for a continuation move. If we have a breakout up or a breakout on the downside, I'm going to go ahead and throw some rectangles in here really quickly just to kind of frame the conversation at the top. This is resistance. Again, I don't think resistance is one number. I think resistance is a range. I don't know how many times you guys are like, you got in, let's just say you got in at the bottom of the rectangle, 59.18 and a quarter. You're like, all right, I hit, this resistance is going to hold. But then you wick through it. You wick through it. You wick through it. So that's why I always like to give myself some wiggle room. Again, I just don't think it's a line in the sand. These markets are volatile. There's a lot of order flow. There's a lot of participation in these markets. So it's I don't know. That's just me. But right now we're pretty. We'll see if we get back to this point of control. That's at 59.08. Right now, it looks like buyers are coming in a little bit pre-market here. We got another 25 minutes before we actually the bell rings in New York. That's the story of that. Let's keep going though through the other stock index futures while we have a couple more minutes. NASI's down 61, but this looks structurally nearly identical, although the volume profile is a little bit better here. Remember the S&P, it was kind of biased toward the top side of the skew. Here it's like right in the middle. This is a really nice session volume profile. We're trading at the point of control as we speak, 21,343. We had a really tight range here in the London initial balance. I'm going to start drawing my rectangles. That helps me think about upward potential and downward potential. And it could maybe we're a range day, right? You maybe we're not looking for a breakout. Maybe we're looking just to kind of sell the top of the value area and buy the bottom of the value area. And that's a strategy on normal distribution days. Sometimes that could be good, not always. But what a lot of times what happens is, as long as you have a really nice distribution like we have today, it's not a double distribution, it's a single distribution. Um, then buying the bottom of the value area, selling the top of the value area is a strategy. Now eventually it breaks out and you get stopped out, but it's something to think about. All right, Juan, how do you get the jacks levels? Go to the website called Mentor Q. Mentor, it's not method, it's Mentor Q. I'll type it in the chat in a second, and then you could navigate there. That's where I get them from. It's an excellent service, and it really helps me with my gamma levels. All right. Is everybody ready for Sara Strat Sniper? Let's hear it in the chat if you're ready. And we'll toggle over. Let's go, chat. There we go. Sara, good morning. How are you?
Hi, Jim. I'm good. Good. Had a little tech issues this morning, but the people that know me know that I'm infamous for tech issues. So, ah.
Yeah, no, I know. I'm like the same way. I mean, wait till you're my age, and then someone has you do something on your PC that you haven't done in 20 years.
No, I'm exactly the same way. They're like, "Oh, do this," and I'm like, "I don't know how to do that. I know how to do charts, not computers."
Yeah.
But we're
You know,
good.
so
We're good.
So, Sarah, you've been with us for many Fridays now, and we greatly appreciate that. Trading live Friday mornings, and it seems to me it's either feast or famine, right? We have Fridays where we're moving all over the place in the equity markets, and then other days like today, kind of tight, narrow range days. And you never know what you're going to get on a Friday morning. What's your game plan this morning? What are you thinking?
Yeah, no, you're exactly right. It is difficult on a Friday because usually the moves have already happened during the week. We had a great day yesterday when we took out the highs on ES and then started coming back through. So we were short to outside day. Today, if we can stay above this level, I'll be looking for longs. If we can't, so broadening formations, right? So we're always talking about them. Oh, I can draw on this screen. Sorry, we're a little out of sorts because of the situation, the tech situation, but we like our broadening formations, and ES is failing to stay above the highs, so we would look to possibly come back down here, but not definitely not today. So yesterday's low is the line in the sand, so we're either going to try and look for longs above it or shorts below it. And that holds true for NQ as well. All of them. Well, I don't really trade RTY or YM much, but I like to look at all of them. So we'll be looking at ES and NQ and kind of see what we get.
So let me, Sarah, let me ask you this.
Fridays are tough.
Well, it's a Friday. Fridays are tough, but also it's the last day of the month, which is falling on a Friday today as well. How do you take that into consideration, if at all?
Usually we kind of pump the brakes, and for a month to end on a Friday and for a new month to start on a Monday is fantastic. And I'm going to talk about that once we get into the stream, because new monthly candles starting are a big deal to us as straters. And, we got to see if we confirm or negate, the outside quarter. So for next month, what we want to see, because we've been calling, I know Pax has too, for a new all-time high, basically this quarter. And so it's real simple what we need to see. And I can do that now, or I can wait.
Yeah, no, you're good to go. I just wanted to get that question in because, I've always it's a weird thing when it's not all the time when the month ends on a Friday. I know it's not a quarterly end, but the month ends on a Friday. A lot of CTAs, hedge funds, other people like to kind of lock in their ROI so they could report their month sometimes. So you get some weird, unusual stuff every once in a while. So I just wanted to mention that.
Oh, no, you're exactly right. Like repositioning all those kinds of things. And, we don't really go very hard, the last couple days of the month because we know a new month is starting and things can change drastically from one monthly candle to the next. So we are going to be watching it. And basically, like real quick and short, what we want to see for next month is we want to see us go above this month's high. So this month is, what is this, May? So next month, we want to see us trade higher than last month's range and then reach an all-time high, because there's pretty much only two scenarios that are going to happen. There's always three, because there's three like strat scenarios, which is an inside bar, a directional bar, or a three. But I don't foresee us taking out this month's lows next month. So either we're going to get stuck inside, that would be terrible. Trading would be bad. We'd be trading in a tight range, or we would go two up again and then continue to the all-time highs right here. And we're not far from all-time highs, like where we stand right now. It's about 6.3%. So it's not very far. So that's what we want to see. We want to see us trade above last month's high next month, tomorrow, or well, Monday, and then continue to all-time highs.
Yeah.
That's what we're looking for.
All right, all right. Well, Sarah, the Stratters are in the chat. They're viewing the stream. They are ready to go. So I'm gonna hop over into the chat and I'm gonna be taking notes. And best of luck today if you get into a trade.
All right. Thank you, Jim. I can see the chat. Let me see. Hi, guys. Hi, Solanke. Hi, Frankie. Hi, Carlos. Sararita. Cool, cool. Okay, so love Strat Fridays. Yay, that's awesome. Okay, so let's talk about our bias and why we're long, which I kind of do this every time I come on, but we're going to do it again for anybody who's new. Let's see. I am operating, let me see if I can pull up the strat setups. All right, so the strat. There are three universal truths that we live by, and the first one is scenarios, which is there is only three ways that any candle can trade. You have an inside bar, an outside bar, and a directional bar. An inside bar is we call a 1, which fits completely inside the previous candle's high and low. And we always use high and low. We don't use closes. So this little candle fits completely inside the range of the previous candle. That's a 1. That's an inside candle. An outside candle is the exact opposite of an inside candle. It takes out the previous candle's high and the previous candle's low. Okay, that's a 3. That's an outside bar. Then we have 2s. There are two types of 2s. There is a 2 up, meaning we take out the previous candle's high. So we have a higher high and a higher low. And this can happen on this can happen after any candle. It can happen after a 1, a 2, a 3. You can still have a 2 up. A 2 down takes out the downside of the previous candle. So a lower high and a lower low. So these are The only candle types that we care about, we don't care if it's a shooting star, a doji, a whatever. The important thing is what side of the previous candle is being taken out. Okay, so the first universal truth is we call these scenarios. Rob Smith called them scenarios, so we call them scenarios. Then we have full time frame continuity, which is how many time frames do you have in alignment? So are you trading in the direction of the month, the week, the day, the 60? And we categorize this by candle color. And candle color is calculated from the open. So from the opening bar, if we're trading above the open, we're green. If we're trading below the open, we are red. So we want all those time frames to be the same color to give us the most high probability setups. And then the third universal truth is the broadening formation, where if you can see my mouse over here on the right side of the chart, you'll have a high, a low, a new high, a new low. And this is really how price action works, especially when you're inside a higher time frame tightening range. And this is what traders love to call stop hunts, but they're not stop hunts. If you can figure out how to trade a broadening formation, you will learn to love them. And NQ has had a really nice one. Let's see if I can make this big. Like back here. Because people like to be trend traders, right? But it's very rare that you get a move like this. And what most commonly happens, and this is what we love, this is our like bread and butter, is you get a high, a low, a new high, a new low, a new high, a new low, kind of expands, and then it came back through. So this is our broadening formation. And this is what we trade, how we trade, why we trade, because we're trading against losing traders. So anybody with a trend-based stop, they're going to get stopped out once we make a new low, right? So anybody who had been long from here into new highs who didn't take profit up here, if they have their stop down here at the pivot low, they're going to get taken out. And the reason we look for longs back up is because of the second universal truth, which is full time frame continuity. So we are looking to stop these people out and then go back in the direction of the quarter, the month, the week, the day, the 60. So we're purposely waiting. We can even short this. Like, and don't get me wrong, we play both directions. So we're shorting down and then we're longing at the lows when we get a reversal. And it's been really nice. NQ, even yesterday, had a beautiful 1 minute broadening formation, which I was playing with futures. Oh, let's see if I can find it quickly. What time was that? So Thursday. Oops. My bad. Hold on. Trying to find it. Usually I can spot it quicker than that. There it is. I think. Hold on. No, it wasn't at 2. I was way done by then. Ha, here. Okay. So it doesn't look so smooth, but you can see it here. And then we puked really hard. But we like to look at ranges. So failure to stay below this leg, we're going back up there. And we took out these little highs, and then we just puked. And then there was a really nice. Oh, nope, don't want to do that. And we've got a broadening formation right here. Again, this takes practice, but you can see we have a low, a high, a new low. So they're trying to come up and make a new high. Now, this would be target 1. This would be target 2. And the reason is because a 3 on the day is a broadening formation on a lower time frame. And if we're unable to stay below yesterday's lows, which is this line, you can't be short. You have no reason to be short. So they are trying. This is the most ugliest broadening formation I've ever drawn. See if I can make it prettier. Boom, 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 boom. So they're trying to come back up here. Because if we can't stay below yesterday's lows, you have no business being short. Currently, what's happening, we only got 8 minutes left on this candle, but this is a 3. So if you think about what I was talking about in the beginning, a 3 takes out the previous candle's high and the previous candle's low. Then you have an inside bar. This is indecision. Then you have a 2 up. So this is a setup. This is a 3, 1, 2 up, and it is on the strat combo sheet, which I should probably just minimize because I refer to it a lot. Right here. This is that exact setup that you're seeing on the 30-minute chart right now. A 3, 1, 2 up. And that's what we're getting right here. So it looks just the same, right? 3, 1, 2 up. So target 1 is this. Again, there's only now 7 minutes left on this candle. So time, we have something called exhaustion risk, which means you can exhaust by price and time. So the goal in this 30-minute candle that's open is to reach up here. Now, this is the 30-minute chart, which means the signal or this actionable setup only lasts for 30 minutes. So when we get a new 30-minute candle, this setup can exhaust, and then we can get a new 30-minute candle. It's why we always pay attention to the flips. And I've been watching Kane stream. I believe he's Wednesdays only, but it's so funny because he talks so much about time and new candles, and he talks about, you know, the 4 hour, the hour, the 30, the 15, and I love it because even though he's an ICT trader, he still kind of uses the same principles as the strat. And honestly, in any price action analysis or technical analysis, you have to use these things. Like you have to use time, you have to use candles, you have to use different time frames because different things can happen based on different time frames. It's why the new month starting is so important to us. And again, if you look at like, it's just so cool. I can go back and show you. Actually, let me try. The COVID crash. I can show you exactly where the best place to buy was. Did I do it? No, because I was too new of a trader then, and I didn't know all the things that I know now. But I'll show you. Hold on. Let me. Ugh, my chart is so strange. 1 second, sorry. And you'll see the broadening formation so perfectly. This was COVID, right? This is so awesome. Just wait. Okay, are you ready? Follow the line. High, low, new high, new low, new high. Where were they trying to go during the COVID crash? They were trying to go down here to take out anybody who had been long since 2018, and they did it. So that is where the downside target was, and then the reversal back up was. So do you see how price action works in a series of Browning formations? It's really awesome. Let's remove all these, and I'm going to show you. That was the low. So that was the low that was trying to get taken out in 2020 when COVID happened. Boom, they did it. Then unable to stay below it, right? Because the candle closed up here. So they were unable to stay below it. So that leads us to believe we're going back up to the highs, right? So Browning formations, a lot of people hate them because they don't understand them. But once you understand them, it's literally a cheat code. And one of my members in the Discord yesterday was like, we say this all the time, but he said it yesterday. I hadn't heard it from him in a long time, but he's like, Browning formations are cheat codes. I'm like, yeah, we know. So we took out the 2018 lows, followed by a big aggressive 3 in the other direction, and then wasn't long till we made a new high. So Browning formations. Let's see. Let me look at the chat real fast. I haven't been looking at it. Market opens in 3 minutes. You can get the, if you're looking for this, it's in my pinned tweet on Twitter. I don't think I can ever say X. Browning formations can be drawn on any time frame. You see, I just drew one on a monthly time frame, and I just drew one on the 1 minute time frame. Elaine is here. Okay. Strange thing is happening right now. It sounds like it's raining in my headphones. It probably is raining outside. Comment on where you enter. Where is your stop loss and take profit? Technique seems nice. The technique is nice and easy. Yeah, so, I mean, they're on every time frame. Right here, here's an hourly. Like, you just have to train your eyes. So high, low, new high, new low, failure to stay below the lows. They're trying to come and make a new high. They're everywhere once you practice with your eyes a little bit. And blending candles together. And you can, once you can see ranges, you can understand it. So like, this is a range. This is a range. They're working on this range, right? So we're always looking for outside bars or compound outside bars, which is multiple bars that make up an outside bar. So you'll see, uh-oh, I just lost all sound now. These two bars are a compound outside bar of these bars. Oh, market's open. All right, that's enough teach-ins. So again, today, it's all about yesterday's lows. So NQ has been the strongest one. So if we're looking to play longs, NQ would be the one. That's okay. I don't need the NinjaTrader chart just yet because I'm not placing a trade immediately at the open. That would be silly. Okay, we're going to go to the 60-minute chart. We are an inside 60. Okay, what's happening right now is we are stuck. We call this mother bar problems. And what that means is that big candle from whatever news was this morning, we've traded inside for 30, 60, starting on 90 minutes. And the 30-minute is attempting to go outside bar because it took the highs, right? It failed them. So if that continues, they would look to take the lows. But again, it's the open. We're not doing anything right now. We're just watching. Okie doke. I need to remove all these fun lines. We're already, let's see, on NQ, we are an outside 12-hour. And just like what we were talking about before, if you view the last 12-hour candle as a range, right? They opened, ticked up, failed to stay above the highs. So once they started falling back through, where were they trying to go? They were trying to go down there, which they did do. So now, since we have a 3, now it's kind of like, well, it did its job, right? So, ES did not go outside, I don't believe. No. ES just went 2 down. And yesterday was fun because we traded the outside day. And what I mean by that is once we took out the highs, that puts you at what we call, again, exhaustion risk. So we were long right here on Tuesday. Actually, we had a nice 15-minute entry somewhere right around there. But we were long on Tuesday, and my partner Alex even posted, I'm pretty sure he posted on Twitter, he's like, we have every reason to believe that we're going to go take out last week's highs because as long as we don't reverse, that's where we're headed. So we did do that. So we hit the upside target. Because again, we're always targeting pivot lows and pivot highs. So 121 points right there. But now, again, once you're failing to stay above the highs, this creates the potential for us to come all the way back down here. Now, as much as I love broadening formations, I hope that doesn't happen simply because we have a new month starting and I'm swing trading. So I don't want it to come all the way back down here. But doesn't matter. And again, NQ's been stronger all month. It actually hit its monthly target long ago. ES has not hit its monthly target. And when I say monthly target, I'm talking about a 2-2 reversal. So 2 down, 2 up. The target 1 is right there, which we did not hit. And if you look at NQ, 2 down, 2 up, the target was March's high, and we did do that. So we know that NQ's been stronger this entire month. So kind of a good thing to note. If you're looking for longs, you want to play NQ. If you're looking for shorts, you want to play ES, just because of relative strength and weakness. Okay, hold on. Trying to... Let me try and do it on this. Nope. Oh. So usually I have two displays, but today we have to just mirror this little laptop. So let's see. You know what? So Johnny S., it always looks easy in hindsight. You're exactly right, but hindsight is your best study material. So when you study the charts, the hindsight becomes foresight. And you will practice that muscle memory. And I always say that, like, the best, and this is how I teach people. I say to them, I'm like, go to, hold on. Go to a daily chart. Well, here, I got another great example for you. Oh, crap. I didn't mean to do that. Go to Tesla. I'm going to show you guys this broadening formation on Tesla because it's perfect. Oh, Tesla hit its 367.34 target. Boop. See, we're always targeting pivots. I sound like Ross from Friends. Pivot. Okay, let me show you. This is such a good example of some strat stuff, okay? High, low, new high, new low, new high, new low, new high, which stayed above the previous candle's high, and then boom, hit the pivot target. I can't believe it. So this is where people should be taking profit. That is where people took profit. You can see this because the candle is red, right? So we're always using time frame continuity, and the candle is red because it was trading lower than the open. So now Tesla is getting a daily reversal, which it could puke it all the way back down through this broadening formation, because you see now we're back below the highs. This is just picture perfect strat stuff. In fact, I used a prettier tool. It was like the Elliott wave or something. 1, 2, 3, 4, 5, boom. And then I had to draw this guy. But do you see it? So trend traders get murdered. They're like, oh, we have a higher low. I'm going to use that as support. I'm going to put my stop there. No. Broadening formations. This is what happens. Reversals. You know where you should exit. If you were long, if you didn't take, like here, say the rest of this chart didn't exist. If you were long from here, your target is there. Once it hits that, then you don't know. So if you did not take profit at new highs, you better be exiting on a 2 up, 2 down reversal, because what's the target? The target's to make new lows. So you don't want to put your stop down here. You want to put your stop up here, if that makes sense. So we just absolutely love broadening formations. And my good friend Shabby, who's listening right now, she is a natural at drawing broadening formations. Now, where is Tesla trying to go today? It's probably trying to go down here. As long as we stay below yesterday's lows, it's trying to go down here. Why do I know that? Because if you blend these two candles together, okay, we're always talking about ranges, and then you see that we're failing to stay above the highs, then these two bars would become an outside bar of these two bars. So your broadening formation, and we're at exhaustion risk, which is a huge deal. So that's where you should have taken profit if you were trading Tesla. But so your broadening formation is going to look like this. Can't see it now, but it will, is if we stay below, and that's the thing, right? Like, you have to stay below yesterday's low to be short to target this low. I'm going to put an alert on it just for funsies. And then I got to get back to my futures chart. Oops, hold on. I got to save it. All right. U.S. stocks. I just added this setting to my trading view. U.S. stocks lower on Friday, but on track to end May higher. Obviously. Oh, what a genius thing to say on the last day of the month. I think we could all be, what are those people called that downgrade, upgrade, and downgrade stocks, like analysts? We could all, be them. All right, so today NQ is looking a little weaker. Let's go to the smaller time frames. We're still inside 60 with 18 minutes left. This is not something you want to be trading. Because why? Because it's not moving anywhere, right? It's consolidating. It hasn't picked a direction. Now, since we've most recently taken the lows out, for this hourly broadening formation, I would want it to the upside. However, this candle closes in 17 and a half minutes, and we are nowhere near triggering a candle to the upside. So if we go inside and down, we will re-trigger the day on NQ. NQ intraday is weaker than ES, which is a little strange just because NQ's been so much stronger for so long. But right now, there's just nothing to do. Remember I told you guys when we started that ES and NQ were looking to go outside 30-minute? Oh, nope. Remember? Because I said they're failing to stay above the highs, so they'd be looking to take out the lows. So that has happened. But we are still an inside bar. We're still stuck in this mother bar, right? On both of them. How are we going to get out of that? That's a little phrase we use all the time. How are you going to get out of that? And what happens is when you're stuck inside a range like this, that's when you'll find your broadening formations, because price discovery happens when you are stuck inside. Now, a 3 is a broadening formation on a lower time frame, and I'm going to try and show you. So here's our higher time frame range, right? Here is our 30-minute range. So if we go to like a 5-minute chart and look at it, you'll see we took out some highs and we took out some lows, right? So your broadening formation exists like this: high, low, new high, new low. This is a broadening formation. Trend traders hate this. We love it. Okay? Because they don't understand it. They're like, I'm going to put my stop down here. And we're like, oh, we have a 3 and then another 3 failing to stay above the highs. We're coming for your stops. So we're short till here, at least. You can take profit there and you can leave a runner for the rest. But that's how outside bars happen. Outside bars are a broadening formation on a lower time frame, and you can always find them. So if you go to your charts, look for a 3 on the day, you're going to see a 60-minute broadening formation, meaning you've taken out highs and lows, like pivot highs and lows. Basically, you've taken out traders. So we love this stuff. But see, we're still stuck in this big range. And again, that's when the broadening formations happen. So this is our inside 60. We are an inside 60-minute. If they keep going down, they're trying to come for these guys' lows. So it's all about stopping out, traders who don't know where to take profit and use the trend as their stops, because that's where the market can be really cruel to people who don't know about Browning formations. Like, oh, I got stop hunted and then it went up. No, that's a Browning formation. If people are like, I shorted here, or I shorted, let's say they shorted here, my stop is here, right? Because that's where people are taught to put their stops, not, protect. And that's the other thing. Our stops don't stay put. We move them down. We protect our profits and we cap our losses. So anybody who's like, oh, I'm short, my stop is here, boom, they just got taken out. And then what happens? Boom, make a new low. So it's not a stop hunt. It's just how price works. So again, inside 60, nothing to do here. So what's going to happen on the 60-minute flip in 13 minutes? The flip means we're just referring to a new candle opening. So the 60-minute flip is either going to confirm or negate the 3-2 day down. 3-2 day down meaning, so this is a Browning formation on a lower time frame, right? So we're always looking to confirm or negate signals. So the line in the sand, when what I said this morning on ES or NQ, is we have to stay below yesterday's low in order to remain short. Okay? That is a fact. All right. Then when you go down to the lower time frames, like the hourly, the lower time frames are going to confirm or negate that. Confirm meaning we've stayed below yesterday. So pretend this 60-minute closed right here. To confirm the 3-2 day down would mean to trade down and make a new low and stay below yesterday's low. Okay? To negate the move would mean to go inside and up. So we're always confirming or negating, but we always know our line in the sand, right? Like that's the line in the sand, just like the monthly candles when we told everybody to be long this month. The line in the sand is to stay above last month's highs. So as long as you're above last month's highs, you can be long, right? Because that's it just is what it is. If price is going to go up, it has to stay up. It has to stay above last month's highs. Looking at questions. Hold on. Shab, did you summon me? No, I just said that you're a natural at drawing broadening formations. And we are lucky to have Elaine in the chat with us right now. She should be teaching students. What are you doing? Are you sneaking your phone, Elaine? Put your phone away. I'm going to take it. 59. Somebody says, I'm short. Let's look. I'm short 59.01. Looking to dump half at 58.91. Oh, another outside bar. 59.01. Why 80? Hold on. I don't understand your targets, but okay. Oh. I wonder if I just got stopped out. I think I did. That's okay. I took profit up there. Small runner. Oh, Elaine, I got stopped out of my swing. For profit. Let's just be clear there. Free period. Nice. How do you have the 4 chart set up linked in TradingView so that you can change the time frame on one chart and have that matched on the remaining 3? Are you talking about, okay, you're talking about this? So my time frames are synced? Yes. So if I click 30-minute, I'm going to see the 30-minute on all the charts. So if you click up here to layout setup, pick the chart grid that you want, and then these are the settings. You just want to sync your interval, and I also sync my crosshair. So very simple. Love TradingView. Dude, oh. So see, so we are staying below. This was so awesome. I'm going to show you guys the trade that we took. It was a quick one. It was right here. Yesterday, so we were looking for outside day target because we failed to stay above previous day's highs and we were coming back through. So what's the only thing that can happen is an outside day. So we took this inside 60 and down to hit outside day target, which was beautiful. And I took profit on I had a TQQQ swing position. I took profit up at the top of the Browning formation, which was around 523. But on TQQQ, it wasn't 523. It was 72. And now I am fully out. Let me double check because I got an alert on my phone. Oh, there it is. Okay. 950. At 950, I got stopped out. So let's just verify. No, my stop was based on a level, 69.16. So that did just hit. So, okay, good. Good job, TOS. Trading for me. Don't you love that? Ugh. I love, like, bracket orders where you don't have to do anything. Trying to take out the lows. The reason I said I didn't understand your target was because my target for ES would have been that pivot low, 58.86. But good job on your short. We're still stuck in the mother bar. That's the mother bar. That's the mother bar. But ES did, so this is going to look silly. And it takes a lot of time to be able to understand that this is a broadening formation. It's not really a broadening formation, but it's a compound outside bar. So range, right? Swing low to swing high. We took out the highs, and then what? What do? We took out the lows. So all this is a compound outside bar of that. So this is what we're always looking to do. So if you're long, this is exhaustion risk, right? If you were short, that's your target. This is now exhaustion risk. So now what do? Do they go all the way back through and give us another outside bar still within the mother bar? It's kind of looking like it, right? But your target, your short target, that's why you cover where you cover. Like you cover here, then you can look to flip and go back long. There was probably a 1 minute reversal. Yep, right there. 2 down, 2 up. So potentially you could target this, which is 3.2 to 1. Actually, your stop should be a lot closer now. So 7.4 to 1. You could target there. That's target 1. This is target 2, which is like 9 to 1. We are not in force on the day on ES. We did stop some people out, right? We stopped these guys out. Anybody who was long and had their stop there, we just took them out. Not in force on the day. NQ is. So NQ, intraday, much weaker. We got a 60-minute flip coming in 4 minutes. We're still inside because we know that, because we're still stuck in that mother bar. We need to do some work here. If they go inside 60 and down, these are your targets. Just look left, draw the pivot lows. And again, right now, this morning, NQ is weaker. Why is it weaker? It's closer to the previous candle's low, much closer than ES, and it's trading below yesterday's low. ES currently is above yesterday's low. So although the Qs have been stronger lately, they are weaker today. So if you're trying to short something, you want it to be NQ. Not ES, because NQ is a lot closer to getting out of its mother bar and expanding to the downside. My swings were on, 3x leveraged ETFs. I was swinging SPXL and TQQQ. I have 2 IRAs. One's a Roth, one's just an IRA. And I full ported, which sounds really fancy, but the IRAs are not that big. But I full ported because I have full confidence in the strat. And yeah, I made like 30% in like, was it 3 weeks, Elaine? I think it was 3 weeks. Which was nice. I mean, that's excellent, you know. I beat the market in 3 weeks. So that's cool. Oh, here you go. So that was the trade, right? I took a lot of profit up here. Why? Because I know what the monthly time frame looks like. We had hammers everywhere. The whole market was hammer up. I was like, this is my time. And so I went in there. And what do we always target? We always target pivot highs, right? So I had a pivot high. I took most of my profit off there for 28%. So 1, 2, 3, I guess it was 4 weeks, 4 weeks long. And then I held the rest. And then, because my average entry was way down here, I wasn't worried about this broadening formation because we were still in force on the month. So the rest of it, well, half of it, no. So I took, okay, how do I say this? I took like 75% of it off here. I left 25% of it on during this. Okay, my stop, is down here because I added up here somewhere. Okay, so I had 25% of my position left like this week. So then this week, when we did our broadening formation, I took half of my 25% off here, and then I just got stopped out here, which is fine. All right, new 60s. Ugh. Just trigger to the downside. Otherwise, there's going to be nothing for us to do. So new 60, new flip can bring new time frame continuity. The flip is very important to us. But honestly, to get all the way up here is a long way to travel just to get outside of this inside bar. So we would prefer, and this is why we say we're a lot closer to going 2 down. And like same thing with the monthly candles. Like this month, we were like, we are a lot closer to triggering the 2 up month. So it's why we've been very long. See this new flip. Let's see. Let's look at the 15. We're still like we're still just stuck inside that giant candle. I don't love it. MGC here, hold on. So on NQ, the 1 hour is potentially about to become a 2 down if it breaks below. Yeah, if it breaks below that. Currently, the new 60, as you're seeing right now, is green. So we can't be short, we can't be long. Now, again, intraday, since we took out the lows most recently, I'd want to see them come and take out the highs. So we potentially could enter long on a 2 down, 2 up 15 minute. So we would have a 15 minute to trigger the 60. Maybe I'll do that. Let me shut up. Hold on. ES is stronger. Did it already trigger? Yes, by 1. I just don't like the fact that we are still mother bar problems. Oh, that was a big 5-minute candle, wasn't it? Did it take out the highs? It did, by 1 tick. Okay, we do not have a simultaneous break yet. We need our friend NQ to trigger the 15-minute, which it's not doing. But currently, we are a double inside 60-minute candle, which means what? Means price isn't really moving anywhere. So you got to be careful. If you're trading it, not a lot, not a lot of direction. Double inside 60. Because we're still, again, stuck in that mother bar. I hope we do not remain inside this mother bar for the entirety of my stream, because that would not be a fun time, would it? I do like how ES took out that low. So, like, here's your little broadening formation. So it's trying to potentially go up here and take out the highs. So low, high, new low, failure to stay below the lows, trying to go and make a new high. We did just take out this pivot high. Okay, come on, NQ, you can do it. We're green. And if the 15 works and can trigger the 60, the target is, got lots of targets. Coming for all these highs, right? Okay, NQ finally just triggered the 60. 15, I mean. So I will just go ahead. This is kind of late, but whatever. So we want them to trigger the 60s, right? That's the whole point of taking this 15-minute candle. So the 15-minute trigger, this is what we call a domino trade, where a lower time frame can trigger a higher time frame. So if the 15, 2 down, 2 up works and hits its magnitude, magnitude is just another word for target. What will that create, negate, or do to the higher time frames? And if the 15-minute works, what it's going to do is it's going to trigger the inside 60-minute, right? Inside and up. So we need to see that happen. That's the whole point of taking that long, was to potentially trigger that 60. Now I could get chopped up because we are still double inside 60. But something, some news I don't care about. Only care about the charts. Oh, let's look at the 30. Inside. So 3, 1. So outside, inside. Outside, inside. So not a super high probability trade, but I like the domino and the fact that ES is above yesterday's lows. So potentially, this is not going to happen, but potentially we could go double outside days on the daily chart, meaning I'm telling you guys, this is not going to happen today. But since we're failing the lows, yesterday is our range, right? We would be looking to go outside day, but I'm telling you that's not happening today. That's too big of a range. It's Friday. It's the end of the month. It ain't happening. We just want them to go and trigger the 60s for us. We got 7 minutes on this 15-minute setup. I need chapstick. Hold on. Okay, sorry about that, but it's hot and dry. Well, it's technically not dry in Florida, but need my chapstick or my lip gloss. So it looks like, so I don't trade ICT, but I do use, I like to have the midnight line on my chart because you will see price react there often. So yeah. Go hit your target, buddy. Come on, move for us. Give us a good Friday. See, so it might be hard for you guys to see, but see this little midnight right there where my crosshair is? That is the midnight open. Get, boy. And again, our broadening formation, I probably should have got 2 because I would take 1 off here and 1 off there. But I also entered a little bit late, and because once we make a new high, then again, we don't know. Because again, that puts us at exhaustion risk. So high, wait, I said that wrong. Hold on. I do that from time to time. Low. This is a 5-minute pivot low, which you can't see on the 15-minute chart. But if you understand, low, high, new low, trying to make a new high. But again, once we get up here, that's where day traders are going to be taking their profit. Because that's where they're technically, I always say where they're supposed to. But yeah, because again, we're always targeting pivot lows and pivot highs, right? So here, if you were short, boom, that's where you cover. If you're looking to go long, boom, that's where you get in. Where are you targeting? You're targeting here. So low, high, new high. Then we have a triple top up here, which we always say double tops and triple tops are made to be broken. They are not support. They are not resistance. They are targets. Because why? Because everybody's stops are there. Here, here, and here. They're like, oh, we have double top, I don't even know what they say anymore. I've been out of the normal TA game for so long. Oh, we have double top resistance, so I'm going to put my stop right here. And it's like, I bet you we'll take you out because now you got a triple top. So price is trying to come up here. We have to break out of this inside 60 though. So you see, we got the time frames. Can you guys see this okay enough? This says 15-minute. And these are just templates that I have saved in my trading view. And then this says 60-minute. Can you guys see that? I have terrible eyes, so I assume everybody can't see. Thanks, Elaine. Yeah, she's been rooting for me in my swing. TQQQ scares you? I'm really behind on the chat. Hold on. Broadening formation on GC 5-minute. Okay, hold on. Tracy reported some news for us. There we go. All right, my stop's going to break even because I'm not stupid. Go get that triple top, buddy. And you got to talk to your charts, right? You got to tell it what to do. It likes to be slapped around. You just tell it. Say, get up there. This is good. So we've got, so our inside 60 broke to the upside. Okay, can I show you the strat sheet again? Let me find it. I keep Xing out of it. I'm sorry. What we're trading right now on the 60-minute time frame is this guy. A 3 inside. Don't touch it. We don't want to touch it while it's inside unless you have a potential domino trade where the 15 can trigger the 60, which is exactly what we took, right? So 3, 1, 2, up. Where's my other screen? And we've got 45 minutes for this to hit its target because, again, we can exhaust by price or time. So price, meaning we've taken out our target, right? Or time, meaning we have run out of time and we get a new 60-minute flip, which could be, it could get stuck inside. So we really want to see this hit its target within the next 45 minutes. And my stop is slightly above break even, just like to cover commissions. We want it to stay above the 60-minute trigger preferably, but I mean, you can expect 5-minute corrective activity. So again, there's your Browning formation, right? Low, high, new low. We said we're trying to make a new high. Once we get here, again, I said if I had 2, I would be taking 1 off here and then 1 off up here. But I do not have to. I'm more in teaching mode right now, apparently, than trading mode, which is fine. I'm here to teach you guys. I'm not here to, make my week. Had a pretty good day yesterday, so that was nice. I traded in the futures account, and then I also traded QQQ puts on my Thinkorswim. Yes, we trade both directions. One like equals one chapstick for Sarah. That's funny. Somebody asked what is significant with the midnight open. I don't have a great answer for you other than algorithmic activity. I don't know. It's an ICT thing, and I've been watching the midnight open for long enough to know that it's worth something. Palantir. Ooh. Okay, so here's another little fun fact. This is, okay, so I had an alert set for Palantir inside week and up, right? So in the strat, when things occur matter, okay? And I was just explaining to you guys, whatever time frame you're on, whatever actionable signal you're on, if a weekly setup is triggering on a Friday, is that something you want to get into? No, because it can't hit its weekly target, right? The whole point of the strat is to hit the target. So the target for Palantir on the weekly time frame, this is a 212. It's on the sheet. The target is to make new highs. I'll find the sheet again. 212. So an inside bar and up. Doesn't matter really the color of the first candle. Candle color, not super important. It's just the direction that things break. So 2 inside. So this is simply an inside bar break play. But when it happens on a Friday, you're not getting to your weekly target. So we want things to happen on the earlier end. So for example, this 60-minute that we're trading right now, or I'm trading right now, the 60-minute triggered really early on, right? It triggered, let's see. So we get at the bottom of the hour. So this triggered at only 10 minutes into the new hourly candle. So is that something you want to trade? Yes, because you have 50 minutes for it to hit its target. Because again, we can exhaust by price or time. So when things occur matter, which is a huge, we have so many little, we call them Rob-isms, which is things that our mentor would say that, you know, stick with us, that we say all the time, and kind of like reiterating our rules. So like when things occur matter. So same thing on the monthly. If you had a monthly setup, like let's say we didn't trigger the month till the last day of the month. Not something you want to take, because we know each candle can bring new continuity. And you can see here, just real simple example. They closed at the highs, whatever month this was, March of 2024, new month. What did they do? They sold it since the open of it. So new continuity, okay? Closed here, looks like a gap down. Bought it, opened, bought it, green, green. This is a great example of a compound 3. What is a compound 3? A compound 3 is an outside bar. So you got this, right? They tried, so the candle opened here. So it's important for you to understand the life of a candle. It opened here, traded down, triggered a 2 up, 2 down reversal on the month, did hit one target, did not hit a second target, started coming back up, coming back through. Where is this candle trying to go? It's trying to go up here. Now, this candle just ran out of time, so it took an extra candle to hit the target. So this is what we call a compound outside bar, where, you know, that's the range of your first candle. And then a compound outside bar just means it took, you know, more than one candle to do it, if that makes sense. Does that make sense? Right here, Palantir. Hold on. Let's look at the day. 3-2. This is a 3-2 reversal. This is also on the combo sheet. So technically the long would be above yesterday's high, which is 126.47, targeting this pivot high, which is also the weekly trigger, right? So if you were a day trader, that's your trade from here to here. If you're stalking the chart, your trade would be on a 15-minute 2 down, 2 up reversal, getting like 350 in 30 minutes. I wish ES would move a little bit. All right, let's go look. What are they doing? Did NQ? Oh, okay, we're just waiting on NQ, baby. Here she comes. Get here. Let's make it a dashed line so it knows to go there. Get up there, baby. And again, same thing. If you took the 15-minute to trigger the 60, you're in from 21.328. So, fun stuff. Fun stuff. Is everybody following along? Does anybody have any questions? Oh, Elaine was trying to use a Happy Gilmore reference. I think you said it wrong, though. It's get in your home. Don't you want to go home? Are you too good for your home? Axel, can I clean my chart? No, it's clean. Yes, I'm bi-directional. Oh, good, Christian. Thank you. Correct. Dane. Man, I haven't heard that name since high school. NQ is being annoying, but we still got 36 minutes. Dane says, if you're trading both directions of a lower time frame broadening formation, then you won't always have time frame continuity with the higher time frame continuity, with the higher time frame. So when does time frame continuity matter? Time frame continuity always matters, but if you know how to trade broadening formations, it doesn't so much matter. And that's the thing about broadening formations. You're not always going to have full time frame continuity. But if you understand what's happening and where people put their stops and how you're trading against losing traders, then, I mean, if you're intraday trading, you don't really care. And like I was saying to you guys, I have the best. Oh, Solanke, I wish you could share photos in the chat. Because I have the best image of the higher time frame inside bar and a baby broadening formation inside of it, because that's what happens, right? So, and again, we are not in force on the day, so it was a-okay to take that long after stopping out the longs from here. Back to the 5-minute opening range. High 59.22.75. So we went 3-2 up. Ugh, come on, we're running out of time. Yeah, NQ. Actually, anybody trading NQ with only 4 minutes left in this 30-minute candle, honestly, at this point, you would prefer that it stays an inside candle because you only have 4 minutes left on that signal. So if it stays inside, then you have a new signal. Then you have a 3-1 potential 2 up. We got to get out of these mother bars. I'm just going to mark other targets. That's the only other one. So 5930.75. And I am known, like, I'm the domino queen. I love the domino trades, which is a lower time frame actionable signal from the Strat combo sheet. So a lower time frame actionable signal to trigger a higher time frame actionable signal. So what we did was this guy. I think we took a 15-minute 2 down, 2 up to trigger the 60-minute 3, 1, 2 up. Everybody clear on that? Hang on just a second. Ugh. I gotta wear headphones because the earbuds fall off of me, fall out of my ears. All right, 3 minutes left on this 30-minute candle. And I really don't care what happens. My stop's at break even, slightly above break even to cover commissions. So I'm just chilling, you know, just letting it do its thing. It's either going to do what I think it should do or it's not. I'm not forcing my will upon the chart, but I understand how broadening formations work, so it should go back up there. And you could view this whole thing, this swing low to that swing high, as a range, right? And what did we do? What didn't we do? We failed to stay below yesterday's lows. Where are we trying to go? Here, here, right? It might, I don't know. Does anybody have questions? I feel like I'm being pretty clear, but I've been doing this a long time. Been stratting a long time. So if anybody has any questions, just let me know. But that's the range. I don't care if my chart is easy on your eyes. I have to look at it every day, not you. You just have to look at it for 2 hours. I'm not changing that for you. Two candles to complete target. We call that still good. What's the lowest time frame I work on? The 1 minute. Can you review going from 60-minute to 15-minute to 5? Yeah. Did NQ still not trigger the... Oh, no, it did at the last second, of course. But we triggered the 60, so... And the reason, again, I'm trading ES was because why? What did I say about ES? I said ES was stronger intraday. So, all right. So this is what we call top-down trading or top-down analysis, which is incredibly, it's everything. You must do this. If you're not doing this, then I don't know what you're doing. So, again, start at the day. What did I say? What was the first thing I said? If we're not below yesterday's low, we cannot be short. So are we below yesterday's low? No. Cool. Go to the hour. We saw that we took out the lows, pivot lows. So higher time frame triggers are lower time frame targets. So the daily trigger is the 60-minute target to the downside. And so, again, being unable to stay below the lows, we mark our actionable signals. This candle closed, so you can't mark it as an actionable signal until it's closed. So this isn't here. Let me just, oof, drawing that to show the range. So this becomes an actionable signal, an inside bar. So we have actionable signals, right? We have hammers, shooters, inside bars, like rev strats, all the things. I would like to look at our scanning site for a second. I just want to see what. All right, so most of the market is 2 down today. We've got 55% of the Nasdaq is a 2 down. 41% of the S&P is a 2 down. I mean, makes sense. What was I saying? Okay, so this closes out, right? So you've got your actionable signal. And again, it's right here. 3, 1, 2. Trigger, target, trigger, target. So you mark it. Okay, then you can go down to a lower time frame and be like, okay, do we have an actionable signal that could trigger the 60? In this case, the 60-minute trigger was the 30-minute trigger, so not really actionable. But here we had that 15-minute. This is a 3, 2 down, 2 up. So again, if the 15-minute works and hits its target, what will that create, negate, or do on the higher time frames? Well, you can see the 60-minute line. This is the 15-minute target. So if you're a scalper, this is your trade. Here to here. That's your trade. Okay? For people trying not to scalp and trying to get more of the move, our target is here to here. So if the 15-minute works, what will that create, negate, or do? 3, 2, 2. Do you guys think it's on the sheet? It is. Right here. 3, 2 down, 2 up. Is that what we just traded on the 15-minute? It is, to trigger the 60-minute 3, 1, 2. So I know it seems like a lot, but it's really not. There's only really a few ways that price can reverse, which is 2-2s, like 2-2 reversals, inside bars, so inside bar breaks, or a 1-bar rev strat, which is a 3, which I showed you forming on the 30-minute earlier, and we said it was going outside. Okay, don't love that my candle is red, but I don't care. Again, I'm in from somewhere 59.05. I'm up. I don't care what happens. I'm letting it play out. This looks like it's trying to go outside bar. And again, because we are still stuck in this mother bar. So this could get ugly for me, but I don't care because again, my stop is at break even. So we could do one of these. We could. We definitely could. Do I want that? No, because I'm long right now. And then we went 2 down, 3. So if they were going to puke it, it would have happened on the last 5-minute candle. So I think we're all right. Gary, I'm not sure of your question. Can I determine how much time has elapsed in NinjaTrader like you do in TV? In NinjaTrader, I have a bar counter on. If you see the bottom right there, it says there's 24 minutes left in this 60-minute candle. How the heck? I don't remember how to do it. Indicators, maybe. Yeah, and then bar timer. Right there, bar timer. Ooh, Tesla, a good example of being unable to stay below yesterday's low, coming back through. So what is Tesla trying to do on the day now? Now it's trying to go outside day. So it's fine to be short when you're below yesterday's low, but once you're not, you can't be short anymore. You got to flip. And the day, you can see where the open is. I have a indicator. The open is 355. If you're above it, you're full time frame continuity green, right? So you cannot be short anymore. And a very like easy thing to do is look at the color of the candle. Like if you struggle to determine bias, just look at the daily candle. If it's red, probably be short. If it's green, probably be long. Not financial advice. That's a really dumbed down way to say things, but it's gonna be better than if you're trying to do the opposite. So if you're trying to long on a red day or a pink day in my chart, you're probably going to get wrecked. If you're trying to short on a big green day like this, you're probably going to get wrecked. So stick to what is happening. Like it's very obvious what is happening. They tried to short it down. Nope. Came back in. They're trying to go up there now. Oh, another 3. This is just real slow. Again, it's the end of the month, so come on, NQ, get. Yeah, give me that triple top. You can do it. You know what? Like, screw these charts. I don't even care about these two. Let's look at these guys. $420. Yeah, that's the target, 421. Sorry, I didn't mark it as target. $91.50. Wait. I'm gonna move it down because we have another saying in the Discord, which I can't say on stream. 2175. I can't say on stream, but it's Solanki, are you still here? You can say it in the chat. Elaine? Anybody? You know what I mean. Don't be a D for a T. You can get the, there you go. Well, yeah. Don't be a D. It rhymes. Don't be a D for a tick. The D rhymes with tick. Do you know? Sorry, I watched Scarface this past week. That's okay. For the love, just go take out the mother bar. This candle ends in 7 seconds. I'm going to move my stop up now. You better not go 3-2. See, I was being a D for a T, but still, we need to take out that target. Whatever. 13, 12, 11, 10, 9, 8. I'll still make 8 points. Ooh. Whatever. The more important thing is the analysis was correct. See, this is why the flip is important. It's why We want things to happen when they happen. I'm going to get stopped out. And then it's going to go take out that triple top. But that's fine, because this has taken an eternity. This 60-minute setup feels like a lot longer than an hour. Again, don't really care what happens. I just wish it would have rocketed it up and then did this, but it's being annoying. The doesn't rhyme with tick. I think you missed the whole point. Yeah, Nick. Yeah. It also rhymes with that. I just hit my own like button. Yeah, so on this new flip, every 5-minute candle went red on the 5-minute. Not a reversal yet, but if we did go 3-2 down, I wouldn't want to stay in there. Jano? Oh, yep, I see the eggplant. Thank you. Yep. Don't be a eggplant for a tick. We'll just say that. I am stuck. Nope, I'm free. The cord got me. Got 18 minutes till my stream ends. I would love for it to go hit the triple top target before that happens, but not sure if it will. Sorry, guys. I can't make the market do things. Hey, Kane. Did you trade today, Kane? I'm about to get stopped. That's fine. Don't be a hoe for the dough. I think I like that one better. Oh my God. Don't you want it to go? You only trade in Q. I could see the reason for your short for sure. Don't be sorry. You're short. You like to fade, which is perfect because that's how broadening formations happen. Just like this stuff. This ugly drawing. Thanks, Sharon. I'm still not stopped out yet. Almost. So far, it missed me by 1 tick. Trader Kane's going to fat finger it, and it's just going to just go through the floor. See? There it is. All right. What did we make? I don't know. 8 points. The 4-hour low taken. Let's see. Hold on, I gotta clean this crap up. It's messy. Remember I said earlier, it looks like that 15-minute was gonna go outside bar. That's why I got out on that 5-minute. 4-hour low. 4-hour low? We already, well, I don't know. I want that triple top. Maybe we can get back in. We'll see. We're still stuck in this mother bar. Nope. So I'm happy with my in profit stop. Because we did go up. No, we didn't go outside, but now we're reversing. And remember, I said we could do the broadening formation again. Choo, 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 choo. And I don't want to be around for that. There's Kane's big fat finger short. Now, could I have flipped short? Yes. Was I prepared to do it in a timely manner? No, I was not. The 4-hour wick. Didn't you say you wanted to see the 4-hour low taken? Which, I mean, so if you're looking at this from like it's all the same crap. Liquidity standpoint or bottom of Browning formation standpoint, we swept it. So I'm not sure what 4-hour low you're referring to. I just want this, all that. But again, we are still stuck in the mother bar. So the Browning formation is likely. 8 a.m. low on the 1 hour. This guy? No. Yeah, but we already stopped everybody out, so that's why I don't. I mean, Trader Kane knows his stuff. I think we just trade a little different. You don't like the way it formed. Yeah, but like, am I like just looking at this? Where's all the stops? Anybody short, all their stops are there. So that would be like the target, which is why I was long. Because anybody who had been long got stopped out here. And then reverse. And they're like, oh, my stop hunt. Like, no, like that's how it goes. Come on, do it. We only got 12 minutes. Guys, I need you guys to chant. Ooh, maybe we can get a fiver back up. We'll try. Oh, I want it. I want it. Oh, yeah. We got a little baby broadening formation. Get up there. I'm just going to do something risky. This candle has not closed yet, but I mean, not risky, but you should wait till the candle closes. 23. I'm going 23 this time. Wouldn't it be cool? Like, I think it'd be so cool, Kane, like if me, you, Tanya, whoever else, Leo, Nick, could like all like get in a room and trade together. I think that would be so fun. Or we could do it on, like an island in the Keys and get like one of those little shanties. Shanty? It's like a house on the water. Hopefully they have good internet. That would be dope. Swimsuits only. Island in the Keys, I'm in. Same. So don't tell Deli, but we had to use his monitor today. So I got like I don't even know how many inches is this, Peter? 36, maybe 40? That's it? 32. See, this is why you shouldn't take trades early, because I didn't get a fiver up. It's a 32 inch, but it's like a wide one. Boo. Kane's beating me. He's going to beat me. He's going to beat me this time. So most of on the 60-minute time frame, most things are 2 up on the 60s, so that's good. Oh, they updated our logo. Good. The weakest sector today, basic materials. Does Delhi have a house in the Keys? Sarah, do you buy most of the time or sell most of the time, or are you mixed? I do both, but my preference is short. Stopped. Boo. That was my bad. Oh, well, let's tell him to buy one. The broadening formation is happening. 30-minute. Because we're still, again, guys, I've been talking about this mother bar all day. Stuck inside this. So you can expect the back and forth. Kane, I'm sure, shorted somewhere. He probably didn't short right there. Hold on, let me see if I can guess. Don't tell me. Don't tell me. Shh. He only trades NQ. I don't know how you ICT people take entries. Look at this broadening formation right here. High, low, new high, new low, new high, boom, new low. See it? It's everywhere, I'm telling you. You can't trade on the trend. Like, most days you don't get nice, easy trend days. All right, so you probably, okay, if I had to guess, don't tell me I'm not looking. You probably waited for this, like, break in structure. And then you probably use this fair value gap to short here. So Kane, did you short around 385 to 381? 374.25.
So Kane's probably
Okay.
he's also probably searching Zillow for Delhi's key house, Florida Keys house.
That's awesome.
Well, good trading today, Sarah. That was good risk management, good everything.
Thanks. Yeah, it was a little slower than I would have liked. We kind of got, we kind of got stuck in, this kind of barcode green, red, green, red, green, red. So it slowed down quite a bit. But our entry was awesome. I liked the entry, the 15-minute to trigger the 60-minute. So that was good. And I like to show people how we do things. And that was a really good example of the domino trade.
Nice. This is going to be a silly question, but you've met Leo before, right?
I have not.
Oh, there you go. All right. Let me introduce two super cool people to each other. We have Leo from Order Flow Labs, and we have Sara Strat, Sniper.
Hey, Sarah, how's it going?
It's going good. I've watched you on stream. We've just never met.
Nice. Yeah, same. Likewise.
Oh, cute. Oh, see, there's the entry I should have taken. But that's okay. I'm not trading anymore. So, what do you see for the day, Leo?
It's pretty much a mixed bag. I'm surprised the overnight low didn't get taken out, and we just rallied from that little econ news drop at 9 a.m. Or I guess 10 a.m. Eastern. So yeah, I'm just waiting for something a little more clear.
Yeah, I hear you. It's kind of been it's been really slow this morning because we've been stuck inside that whatever time that was, 8 a.m. news. We've been stuck inside that all day so far. So not very exciting trading today.
Yep, for sure.
Yeah, Michigan sentiment came out. Sentiment came out and a little, beat estimates by a little tiny bit across the categories. So it didn't spark any unusual activity, I do not think.
That's been a mover lately. I mean, the last,
Yeah.
there's been a couple of velocity logic events that have happened on those.
Yeah, it's those Wolverines, man. They're just mixing it up. So, Sarah, big plans this weekend?
No, not big plans this weekend. Pretty chill plans, I think. Maybe go jet skiing. I think that's about it.
Oh, that sounds awesome.
Yeah. It's so funny. I've only been in Florida for a little bit over a year, and it's so funny because everybody's like, "Oh, the pool's open," and I was like, "Man, that's really cool that like our pool is always open, so I don't have to like wait for Memorial Day to like get in the pool or get tan." It's just kind of cool. I like it.
Yeah, I'm between you and Chicago. So I've got about pretty much 10 weeks maybe where you don't want to hop in the pool. It's too cold. The heater can't keep up. But unless you're doing a cold plunge, unless you're into the Joe Rogan cold plunges, which I am not. Leo might be though.
No, not my style. Nope.
Oh, man, any event.
That like
Well,
became so popular with the trading community. The cold plunges, I guess, to like calm your brain and make you like breathe. I would never ever would I ever do that.
yeah, I'm a hot tub martini champion. Pride myself on that. Anyway,
Yeah, Jimmy, my guy.
so Sarah, thanks for this morning. Some great trading, great analysis as usual. We really appreciate you being in the studio and being live with us here on NinjaTrader Live. And thanks for being here.
Awesome. Love to be here. Leo, have a good session. And Jim, I will talk to you next week.
Absolutely,
Sarah.
can't wait. All right, folks. We have the man in the house. I thought I said goodbye to you yesterday. You're back today, this morning, on a very rare Friday morning appearance from Outer Flow Labs in Leo. How are you doing, buddy?
I'm doing pretty good. I just jumped into a shore while we were chatting here at 376. Just looking for this to break down a little bit.
All right. I'll tell us a little bit about it, especially in the context of today kind of being a tight range day and not a lot of not a lot of traction.
Yeah, I mean, this is I wouldn't necessarily call it a pattern I look for, but it's just kind of like, we had this kind of breakdown, open drive lower, didn't take out the overnight low, no big deal. Rallied all the way back up to the opening range, and then here we are just kind of chopping around, not able to progress, much further. And I took a stab like right in here, I think at right about 47 after, and then I took another stab right here, 57. So this is, if you looked at the Delta profile over here, it's since reset, since all of this volume was put in. But basically, there's just tons of offer delta up here at the highs, and so there's buyers that are lifting the offer, but the offer is kind of reloading, and so that for me is like classic absorption, right? So passive sellers are up here just kind of absorbing all of those buyers, And so that's something that I look for as far as a trade to fade, potential this potential range for some type of break. So far we've gotten a couple off. Um, I'm just kind of holding for a little bit more of a breakdown than what we're seeing right now.
I got it. And since the reset that you just mentioned, anything that happened before that's out the window, or no, could it come into play later?
No, so the way that this is developed, I guess, is it takes so every time there's a new swing leg in the market, and that's set, by you, like, so I think I have it set for like 40 points. So it resets every 40 points. I just know from memory what happened up back here. So without,
Yeah.
having the color bars or anything turned on, I just remember, what happened back there. So I still keep that in mind for sure.
Got it. Yeah, it is amazing when you're doing this long enough. You just kind of you see something and then it's in your brain, you remember it, you're moving forward, but it's still there.
Right.
That's more than 10,000 hours. You probably, yeah, you're way more than 10,000 hours in this business.
For sure. Yep. I wish
Yeah.
I could remember it all. I probably forget more than I remember, to be honest.
No, wait till you're my age. There's all sorts of stuff I forget.
I'm sure about that.
Most notably, where did I put my car keys last night?
Right.
Oh my
Well,
God.
pretty soon we won't have keys, Jim. We'll just have like a little thing you put in your wallet. I think that's already kind of happening.
Facial recognition.
Thumbprint, iPhone, whatever. It'll just be there.
Yeah.
Yeah, Tesla's got that right now.
I love Tesla. Every time I drive in one, it's just my favorite car.
I have not driven one or ridden in one. I need to.
You need to. There's a couple of things that are surprising. It's super quiet,
Like a golf cart.
like a golf cart, and it's super fast. It's just accelerates like nothing you've ever been in before. And then if you do the auto drive, the autopilot, it's a, I'll just say it's a freaking miracle how
Really
awesome that is. Yeah.
interesting.
Yeah. So in any event. So typical Fridays. Leo, are you trading Fridays if there's something, or do you take Fridays off? And then how do you approach the afternoon?
Yeah, I'm usually pretty active on Fridays. I mean, I don't really treat it any that much differently than any other day. I'm usually active most days until around, I would say, 11 to 12 Central, or maybe more like 11 Central. I try to be done around that time frame. So yeah, I mean, it's not a time that I'm normally inactive here. So
Got it. And then last day of the month, is there anything you've witnessed on the last day of the trading month? And in particular, today's Friday, it's the last day too, which is cool. But or is it just another day?
I mean, for me, it's another day. Obviously, there's quite wild stuff that happens at the close. I usually watch that just for fun, but it's anything can happen, and I don't really have an edge at the last 10 minutes of the session anyway. Um, but yeah, I always like to watch it for, just grab the popcorn and just watch the hilarity that ensues. A lot of times, there's some wild moves.
Yeah, for sure. Today though, it's like I'm with old man 30-minute candles up right now, looking at the initial balance, and we have that xylophone pattern, up and down, crossing it back and forth with a really nice volume profile for the session though. It's almost textbook right now for the Nasdaq.
Yeah, for ES as well. I mean, ES a little more Gaussian than NQ for at least the RTH session.
Yeah, it's pretty similar for the whole session. But it's funny, me and you are the only two people I've ever heard live broadcast Gaussian distribution live in a trading network.
Well, my buddy Job hasn't been on here, but he would say Gaussian as many times as he could. He's a huge volume profile guy, so anytime we have a Gaussian profile, he gets a little nerd out on that.
Yeah, no, for sure. I was initially introduced to market profile long time ago by one of my mentors, Dan Gramza, who's he's just in terms of interpreting Japanese candlesticks and the market profile, he's just the greatest. And and then you make the transition right from market profile to volume profile.
Mhm. So do you still use market profile concepts at all? Like I know obviously the volume profile is a little different, but
Dude, when I was a clerk on the floor of the Board of Trade, way back before you were born,
mhm.
I literally, they gave me a piece of paper, it's the grid paper, you know what I mean? And then you literally have to write, A, and sit around, B, 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 B. Wait, we wrote it with the pencil and paper. It was crazy.
That would be wild.
Yeah.
Like a little flashcard thing.
Yeah. And then the trader takes it from you and says, "This should be a B, you idiot," and throws it back at you.
That's funny.
Yeah, those were the days. But yeah, that's how I started it.
Nice.
All right, man. Well, listen, I'm gonna let you do your thing. I'm gonna back out of here. I'll be in the chat, and good luck on this trade that's cooking.
All right, thanks, man.
All right.
What is going on, chat? Kane, are you short too? What was your entry? I'm curious. We're working on something. I wouldn't call it cooking. I'm just in a little one lot. Yeah. So I took off partial here at the mid because that's my this is the area that I take trades from and target to very often. So if I think the price may bounce here and I'm short, I'll cover into it. So I think I have 15, maybe 15 points on the first piece. And yeah, I mean, just kind of looking for the other side. I want to see what happens if we do get to the other side of this OR 328 and, target lower. I would like to see some momentum enter this market. And if it doesn't, we'll wait for a different setup. On the higher time frame, I just, something that I noticed just kind of looking at it, the 60-minute chart here, it looks like we're about to get stopped out. We've got a bunch of wicks in this range, this 250 range. And I don't know. I want to see that kind of taken out a little bit stronger. We don't really have anything going for us from for me, from a long standpoint right here in this spot. So that absorption we saw earlier, kind of talked about it at the start here, is what got me interested in the trade. So I want to see if we do get acceleration, just to kind of let that momentum play out and see if I can actually add to this position. That's kind of what I would be looking for. So that is kind of the scenario we're looking at right now. Momentum is on the long side. Yeah, from the news drop for sure. We rallied right out of the hole. Somebody asked so what did I mean about the overnight range? So for me, overnight is from Globex Open to RTH. So that would be the full from for Central Time 1700 or 5 p.m. all the way through 8:30. So that would be the overnight session. Stowe's long, looking for 420. No surprise about that. Interestingly, there's a bunch of kind of equal highs in that range too. So that's very suspicious. As my little one would say, it's a sus area. I think it's right in here somewhere. These little equal highs. Could be wrong. I have it over here too. Yeah. So there's 1, 2, 3, 4, 3 equal highs right there. So Stowe, I'm sorry, buddy, I'm fading you. It's also the high of day, 400. Oh, you're talking about. So I don't really refer to this as current session, since RTH, cash open, whatever you want to call it, started, right here. So for me, that's resets. So I marked that as overnight high for sure. 421. What is the future of painting the tape now that you guys are here? I don't know. I'm not really sure. I think, me personally, I've shared a lot of how I trade, strategies, and both in written form and in like various tweet threads, chart books, videos, all kinds of stuff, as well as the podcast. And now we've been doing this for a few months. There's a lot of things I've shared, and also a very detailed playbook. Um, I'm looking for a way to centralize that information so that I can kind of have one medium, one place to share things, just kind of as a resource. But I haven't quite figured out how that works yet. What that looks like, I guess. Twitter is becoming more and more less fun or less attractive for me to hang out, to be honest. The bots are crazy. You post one tweet and you get 20 reply bots. It's pretty wild. So I want to see what we do here because we have this little LVN. It's the bottom of the 5-minute OR. I could definitely cover this trade here and kind of look for a new setup. That's definitely one idea. I could also, see if we get some momentum through this area and then look for kind of a new setup to get, to add to this trade. I haven't quite decided what I'm going to do from that standpoint. So we'll just watch and see what happens. There is a bunch of selling. We saw this selling right here in the 350s. They're definitely getting rewarded for all of that. I'll be cautious of new selling into these 38s that kind of get held up. So I just want to see how this develops here. Something that we're seeing. We got 24-hour view up there too. We're seeing like these little rotations, make a new low, rotate up, make a new low, rotate up, make a new low, rotate up. Chop, whatever you want to call it. So I'm not going to get too excited about the idea that we're going to, break down. There is kind of this little interesting setup occurring right here at the OR mid. You have all these, rallies off of it where it's support. Now, it could turn into resistance. If I was paying attention to that spot, I probably would have. That's normally a pretty good ad for me. We need to find out where Stowe's stop is. Will you reopen the link to your Notion trading prep? Yeah. That's what I was talking about earlier, is a place to put all of that stuff in one spot. You're targeting 59.28. Jeff, you're short? No, whoa, hold on. You're long? Jeff, we were on the same okay, this doesn't work. We were on the same trade yesterday, and now we're on the opposite trade. Is that what you're telling me? Oh no. From where? Where are you long from? Where is Stowe's stop trade is one of my favorites in the playbook. I haven't put that in the official playbook yet. That's not public information, XYZ. Chris, this was a surprise. I was called at like 8 o'clock last night and said, "Hey, Leo, can you get on stream at 10 a.m. tomorrow?" And I was like, "Cool, no worries. I got it." 59.08. Oh, you're trading ES. You're trading right from point of control, Jeff. You never diddle in the middle. That's like the number one rule of trading, right? I'm just messing around with you. So yeah, this is going to be kind of a boring session, but you know, we'll see if we can't make something fun happen. No, I don't know about that fella. Ace Undercover. You're short 376. That's a great entry. That's my entry. Except I have 376 and a quarter. So pretty unfair to have two pivots at the same time. Yeah, the Joe pivot, which is an OFL study, is like right here, right at the OR mid. So there's good confluence. But yeah, I mean, we've got to break this LVN right here with some volume. They're really selling into it. You see some of the selling really pick up. If I had the time at sales streaming, you'd see just nothing but blood red on your tape. So this is kind of the key spot for me. Just gonna watch for either, if bids show up here, I'll probably cover this trade. If we break through it, then I would want to see some participation below, right? And build some volume into this node here, and then look for maybe an add against that LVN. So kind of the idea is, let it turn into resistance and then take it from the other side. Do you trade the opening range? I do trade the opening range. I have a very specific setup that I've shared on Twitter with respect to the opening range. I would just go look that up. It's basically this level. Like today's setup was to be short against the 5-minute mid. It didn't work today, but it does frequently work. I shared a lot of stats with respect to that trade setup too. What delta rotation on this one? I'm currently on 40, which is really aggressive for rotation value on this profile. But normally I'm running like 60 to 65. What's your Twitter? It's ES_F_Leo. This is really not a good look for the bulls. They rallied at 150 points, couldn't really make it to yesterday's close or the overnight high, and now this failing here is not really a good look for them. Jeff, sorry about your long, brother. This could get ugly. Is that the same thing as it's so over? Yeah, I mean, I actually agree with you that below this little LVN right here, it doesn't look great. But I think where, I see terms like, hey, this could get really bad, this could get ugly, and not to counter what you're saying, but anytime I invoke, lots of either emotion or like a really strong bias, that usually gets me in trouble. Because I'll be like, oh, if we break this level, then it's super, super bearish. And therefore, if things are super bearish or super bullish, I am going to act in this way. And then oftentimes I'm blind to new information that could be, counter that argument, so to speak. So I always want to caution myself against a bias that's too strong, or any level, to the tick that would be too strong. Because, we could break those 328s just like we did now and kind of rally back right up into them. So I think having a little more qualifications for that type of idea is a great way to approach trading. Nothing ever is ever going to fit in a vacuum like that. Remember the low last week, 727. I think it's possible we could start toward it. Maybe not today. Yeah. Let's look. Last week. Where? Let's see. Do I have? Okay. So we have last week's high up there. That's a long way away. The key is to stay below. Right. Yeah, I agree with you. Staying below 328 is where I want to. That's where I want to stay for sure, to stay in this trade. Yeah, I don't disagree with that being an area to target on the higher time frame. If you look, we have a balance area. That's an OFL based study, and we had a peak below it, rallied right back to the other side, peak above it, and then broke and came right back into the middle of where all this volume is. And this volume profile is anchored to the start of the balance area, which I think is started on somewhere around here. So what's interesting is if you look at the balance area itself, from high to low, and you say, all right, well, we drew the volume profile from the start of that balance. It's perfectly Gaussian. So we were talking earlier about Gaussian profiles. We have balance on a higher time frame from a value standpoint, and then volume is telling you the same story. So this is really nothing but a very balanced profile on a much higher time frame, started on the 14th. So that's good information to be aware of on the higher time frame. So yeah, I mean, if we do break those 100s, we could certainly go down to the 700s. I mean, that's kind of like a duh statement, but it's like we're rallying back up a little bit. Boring. I always criticize what the market does because it's not doing what I want it to do. I'm sure nobody else does that either. You aren't wrong. The market is boring. Still, you're long again. I don't use fibs, no. The closest thing that I would use to a fib would be these boxes here. These are they're basically, if you said what's a good pullback from this leg right here, this from 234 to 399, it would be somewhere in here, right? And so if we get down to this range and we kind of stall out, that's an area where buyers may step in. For like the idea here would be, you have this swing, pulls back to here and continues higher. These retracement values are, you can input that, right? So for example, mine are 65 to 71% of this leg here is this little box. It's not a fib, but it's just a retracement. I'm missing out. I must be, they're saying I'm missing out. You bought 330s as it was pushing back. I don't hate that trade. I kind of want to add right here. I would kind of want to see it press against the mid again for an ad, but I don't know. It looks like sellers are trying to hold this thing right here. Oh, we'll just let it play out. I would love to. For me, in the price action that we have, my ads, especially on the short side, need to be very, very selective. because, we're basically just kind of like chopping and grinding lower. Stowe's covering some into this rally, I bet. All right, let's see if we can't spot a little ad here. All right, we'll put an extra one on. Stowe scales out, I add. That's right. CNES is right back to its point of control at 09. So ES right back into the middle. Even though I don't trade ES, I do have basically just like a volume profile with a ladder with some basic MGI stuff. So it's always good to be aware of what we're going to get. We are going to have to make a decision here what to do. My stop's at 81. I won't let it get up to that point. I'll just cut it before we get there. Now in Q's testing point of control from below. Jimmy, it's a beautiful bull flag. Stowe must be singing. Stowe, are you singing? He's probably saying a new high would be encouraging. Yeah, I don't love the fact that this is kind of when tested that low volume node and rejected from it. I'm going to probably get out of this trade here in a moment. Yep. I might even have I had a data issue there for a second. All right, let's reset. Let's see. Let's see what we can't snag here. So context is always good to keep in mind whenever, kind of a reset moment. So just kind of re-narrate, what happened in the session so far. So we had this open that basically was just an open drive, broke prior day low, and couldn't take out the overnight low. So that's kind of a knock on the sellers. They were weak. They really just kind of got me out of my trade to that's cool. Somebody must be watching the stream. Market makers, who's watching? Join the longs. Search yourself. You know it to be true. So then you have that rally from that econ drop. Took out the opening range high, but couldn't really progress any further. And we rally basically broke from there. All that absorption that we talked about earlier took us back to basically value area low. And now we're back up to this range we were in earlier. So for me, not a great point to engage in a trade. We were short up in here, took the ad at the overnight at that OR mid and it just didn't work. So getting out of the trade is the best thing to do there, and just wait for something else. What charts do you evaluate to utilize price action? This one. This is my main execution chart. It's a 500 volume chart, and I've got, basically some MGI, the volume profile, and a delta profile. So it's pretty simple. And then on the higher time frame stuff, this is a 60-minute chart. I've got just some basic weekly levels. Here, let me delete this. I deleted the wrong one. Oh well. So yeah, the balance area that I just deleted will get added, re-added back. But basic stuff, I don't have too much complexity into what I look at, because it helps me stay with what's important. So basically, higher time frame, lower time frame, and then I usually will have that higher time frame just to the right of my screen. It's kind of annoying that they rally that right all the way back and it's stalled out. Sellers are definitely in charge right here. I'll be kicking myself later for missing that. How do you use the delta bar on the right side of the chart? So there's really two ways to use this. Right now it's filtered. So when it's gray, that just means that there's not enough from a threshold standpoint for it to print anything. And so this is actually a new update. This is something that we've had on some of the other platforms that we support, but it's new for us on NinjaTrader. Essentially, there's two things to look for. One is to look for initiation. So as we push away from a range or basically a rotation down or up, watch for initiation to, if we're going down, obviously you want to see like very aggressive selling. That will be demonstrated by if we had this filtering turned off, you basically just see like nothing but red volume bars or delta bars. And then obviously on the other side of it would be blue if it were going up. So that's one way. But the predominant way that I use it is actually for absorption. So let me actually turn this up a little bit so we can see a couple examples. Change this guy. It'll take a second to reload here. Okay, so up here in this range, I kind of mentioned when we started, we had all this buy delta up here at these highs. And so I basically, for absorption, for me, it's two simple things. There's sideways price action. So we have this little consolidation range. And if I just mark this out, as a little rectangle, just to kind of illustrate that point, you have, wrong button. Sorry. Okay. So you have this, this sideways price action. So that's one thing that I look for to spot absorption. And then two, delta that's building up in that range. And this, I'm looking for positive delta at the highs of a range and negative delta at the lows of a range. So if we started consolidating down here, I would, visualize, I don't draw boxes, but I would just visualize, hey, we're going sideways. And then if we had a bunch of bid delta building up in that range, I would, classify that as absorption at that point. And that actually takes quite a while versus the initiative activity where it's, if buyers are lifting the offer and the price is, mooning, then you're going to see buy delta all the way up as we're pushing out of the range. Same thing with sell side. So it takes time for that absorption to set in, and those are usually the best trades because once they break, they typically provide a pretty good move and opportunities for ads and all of those things. Now, we did kind of see that a little bit, but it just didn't get aggressive enough for the market to really move. So those are the two predominant ways that I use this delta profile over here. We're starting to see a little bit of that absorption. We have 132, 98, 210. I would just want to see us go sideways a little longer before I jumped in along. And the idea there is, we have that absorption. We're at the bottom of value. The day's been pretty much rotational. We kind of have a bit of a weak high. If you look at the volume profile here, we have a really nice, lack of volume on the downside. We didn't spend a lot of time and build volume down there. We've done that up here. It just looks a little unfinished. So you could have a bit of an argument to be slightly bullish, even though we're going down. We've broken those 28s that we were talking about earlier. But it's Friday, the market's not doing much, and usually when it's not doing much, it's a good time to get a little bit bullish. What time is Trump speaking? I don't have it on my calendar, so if somebody has new information, that'd be great. I think I'm going to, the buyers are trying in this little 310 range. I give it a whirl. We'll jump in with 2 lots here. ES is also at the bottom of its value area for RTH. So that's, when both markets are at a range where we could see a bit of a reversion type of activity, along with some of that, this little area we're starting to stall. It's not a bad spot. We're not making any progress yet, though. All right, well, this might be a quick trade. All right, I'm out of that. Oh, one thing I was going to do is turn up the threshold here so we can get a little more of a visual on this delta profile. Give that a minute. Can you do a layout tutorial on what? Yeah, I mean, I was in one and got stopped out. I actually, we missed this little zone we talked about earlier. Let's see if we can't get a little bit of a pullback to jump back in it. All right, we're in at 103. Buyers are really stepping in, so that's what we want to see. This is one of those trades, even up in, when we started at 08 or wherever we were earlier, you kind of want to see it go right away, kind of right or right out. And that didn't happen, but it is right now. So I don't have any TP lines preset. I'm going probably to cover one at least up here at the OR low. So for me, that would be 28. But, potentially earlier than that, just depending on what happens. Buyers are, kind of stepping in, but we're still walking it down. I don't really love that for this trade, even though we popped, 20 points. So I'm going to take off one there. Just kind of, it wasn't a scratch. I think I took 4 points. I just want to see something a little more convicting. You're putting another one on. Looking for 58.95. Yeah. Ooh. Oh, thanks, Don. That's awesome. There's no trend. This is a balanced day, right? We had this open here. We tested lower. We tested up higher, and now we're testing lower. So there's no trend. It's a balanced profile. So when we do that, we have these, pretty large rotations, down, up, down. You want to fade the edges of the extremes. So we're at an extreme. We're at that prior day low, which, could be support now. Also kind of what we're seeing right here in the deltas gives us a decent opportunity for a long. Yeah, it seems kind of that way. We're battling right there at Friday low. I mean, there's really nothing to do. You kind of have to wait. Um, kind of have to wait. I bet Stowe's in there. Could you explain the different gradients? Yeah, so there's value and then there's outside of value. So value area is 70% of the volume for the day. And so the dark shaded volume is the in value. So when you're in value, that's 70% of the volume for the session. And then when you're outside of volume, that would be the value. It'd be the lighter grade. Pretty simple. I don't have GEX at all. I don't use any type of options, GEX or anything like that, Dave. How do you scale risk in your career and avoid tilt? I don't know that avoiding tilt is necessarily a a goal that I have. I think my goal is to focus on good performance, and I'm aware of the fact that I'm not perfect. As a trader, I'm just gonna have rough, hard days, and sometimes on those days, I do, get emotional or, tilt, and the way that I prevent myself from going off the rails completely is, I have a DLL, right? So, just a very hard-coded loss limit that if I break that loss limit, it hasn't done any damage. Stowe Stowe held his breath for 7 minutes. Yeah, I mean, I didn't really have anything to say either during that time frame, but now it looks like we're starting to push away. Passed out for a second. And what is the volume profile where you could find it? So NinjaTrader has a volume profile in the order flow package. So it's part of their order flow package. I always use a DLO. Yeah, exactly. A DLO is the most important thing that you can have for trading. I mean, you a lot of people are very interested in, nailing the perfect entry, which doesn't really exist. Or just, having 100% win rate or never losing. Like all of those things don't really don't have are not built on a foundation of reality. But what is real is that you're going to have to risk you place risk in the market, and how you manage your risk is one of the most important things in trading, because you if you're not able to manage your risk, the market will do that for you, and usually that's in terms of blowing your account, or just not having money to trade. So if you don't have money to trade or come back the next day, you're done. Your career is over until you can build up enough capital to trade again. So managing your risk is the most important thing, outside of having predefined criteria, setups or reason to get into a trade that have positive expected value over time. Um, you still have to be able to manage risk when you experience a drawdown, or have any type of down situation. Survival is the name of the game, just like Stowe said. No, I'm on a volume-based bar chart. So this is a 500 volume chart. I think I'm going to ride this one lot warrior for new highs. What do you think? They're going to kick me off the stream in 8 minutes, but if we can break the 400s, that'll be a nice 100-point trade for me. Wondering why, Nick? You just have to get in there and get dirty, Nick. Get in there and take the trade. Can you explain how you differentiate between a pullback and a rotation? I think it just depends on your time frame. So, rotations are basically, if you have a way to define a rotation, rotations happen, the markets go up and down as a function of, price moving, right? A way to measure that algorithmically or just with with code just kind of depends on what time frame, what time frame you're looking for rotations on, because that's more of a fractal thing. So rotation is just basically like the way we look at a rotation would just be price going up and down over time and having a way to define what makes a high and a low. And so then you just measure the range from each high to each low and then do it over a period of time. So for us, we do it over 10 days, right? And so we would say the average rotation in NQ, based on the way we measure it, is, let's see, what is it right now? We post it every morning, so it's not hard to find. 74 points. That's pretty low. So 74 points is the average rotation that we look at. And so that means that from average high to low, the way that we measure a rotation is about 74 points. And that obviously changes over time, right? So as the market contracts, that's going to come down. As it expands, that's going to go up. So that would just be, how do we measure a rotation, or what is a rotation? That's the way we look at that. A pullback would be something that we're just seeing right here, right? So we have some of these larger moves that are way beyond a one rotation, right? This is 234 all the way to 400 is 170 points, if my math is right on the spot. So you have a 120, 170 point move. A pullback would be right into this zone where we retrace part of that move and then get this long for that continuation trade. So that would be a pullback, looking at some higher time frame leg, right, from here to here, and where is that pullback for continuation of that move? And that's for us, that's right in this zone, basically where we're pulling back from. Nice to have that confluence with prior day high and all this selling that really didn't progress further. $48 points. Yeah, I mean, that's 48 points is pretty low. You're welcome, Alex. Nick is soft. Yeah, I mean, post Euro close. It's Friday. We're testing VWAP here. I need to get that added back to my NinjaTrader chart. But there's 24-hour VWAP right here, and then there's the VWAP from this anchor, this leg high. That's another thing that I want to get added to the NinjaTrader studies, is being able to have a VWAP automatically anchored to, like, this profile right here is anchored to this high. And so if you actually drew if you anchored a VWAP from this high, it would be, we're testing it right now.
Leo,
What's up, Jim?
love your entry, brother.
Hey, thanks. I tried to get add to that short when it came back to that mid, and just kind of it got me out of the trade, and then tanked, and then we got a little long down there. So
Yeah, it'll be an interesting finish here.
yeah, I mean nothing's really happening. We haven't really gone anywhere and done anything cool. It'd be nice if we did.
Yeah, we'll see. We'll see. But entry stop, perfect. Love it.
Appreciate that.
So we're getting close to wrapping it up. Oh, you got big plans for this weekend?
More baby prep. We painted the room. We got like the nursery's ready. We just have a few things to do left before before we're ready. My wife said the go bag is ready. So I mean, technically if something happened, we'd be good to go. But
Is there an official due date or?
yeah, so she has to have a C-section. Either way, like no matter what happens, that's scheduled for the 27th already, June 27th.
Oh, okay. So you got a little time.
Yeah, for sure. I just, hope it doesn't come early.
Yeah, I had one that came a week late and then almost, and then another that came a couple weeks early.
Yeah.
You know,
Our little one was on time, or we actually had to induce our 6-year-old.
Wow. Well, that's exciting times for sure.
Thanks, man.
So, all right. Well, listen, great job today. I'll keep watching this trade on my own here. We're going to wrap up the morning session with NinjaTrader Live. I appreciate everybody being here. Everybody in the chat's been awesome. We had some great guests. Next week, though, we do have some great guests too. We have Carol Roth, who New York Times bestselling author. You will own nothing. Can't wait for Carol. We have Dave Keller next week. We have Fabio from Mentor Q. These are early morning special guests. Russell Rhodes is also going to be with us, who has some ties to the Oklahoma State Cowboys.
Oh, all right.
Yeah. So another exciting week next week on NinjaTrader Live. So in any event, Leo, thanks for being with us. We appreciate all the Order Flow Labs guys participating and helping us out big time every single day here on the show. And we're not broadcasting this afternoon. We're done Friday officially right now. And so I do want to really emphasize the main message here, and that is be safe out there, be good to each other. See you soon.
Thanks, Jim.